Is it recording?
Yes.
Well, I'm going to start it over because some are going to be watching this video that didn't get to attend, but they bought the course nonetheless. JJ, the CPA here. Hope you're doing well. Thanks for joining us today. Going to be a great Saturday. We are going to focus in on the self-employed in this seminar, PPP2, PPP1 forgiveness, the tax credits, an update on the EIDL and the grant related to that. Thank you for your business. We had a pretty nice little surge here in the last hour plus of people jumping on. So I appreciate that. Hope you're having a great Saturday. We are going to send you a reminder that you'll be able to go later and watch this video back for access for 30 days, as well as the materials. And if you check back within about 24 hours or so, there'll be a link up. We will send you an email to remind you of that. I wanted to just let you know, tomorrow I'm doing a seminar. It's a monthly strategy seminar, but I am just converting this to, I'm just gonna, after this Sunday, as an FYI, I'll offer it to those that have signed up for it, but I'm just gonna basically close the group, give about a week for people to sign up, and then that'll just be a private group for the rest of the year. We'll make a commitment to each other. Nonetheless, just letting you know, I have one tomorrow, not about PPP, not about PPP2, basically covering things that I don't present on YouTube because it's more directed at my clients. The seminar materials are available. You should have already been there, but I know some signed up right at the last second, which I appreciate, but jjthecpa.com SE Tools is where you will find the materials here. FYI, I'll keep this website up maybe 48 to 72 hours. You can download the content anytime between now and then. And in the video body, when I take down the website, in the body of the video that you'll have access to for 30 days will be all the same links. So you're not going to lose access to the links. They'll just move to the body of the video within at least 72 hours. You probably know who I am. That's why you're here. I've got going on 28 years of experience, 23 of my own practice. The only reason I want to hit on this is that what I'm going through today is what I'm, in essence, going through with my clients. It's not anything that I read and I'm re-reporting. This is my research, it's my verifications, and as a CPA, I'm excited to be able to share this with you. I haven't taken on any new clients except one a year for the last 3 years, and so I'm really enjoying the YouTube channel and then these opportunities. There was a checklist in case you just signed up. I also want you to note that there is a checklist for the self-employed seminar. The checklist is documents that you would need for PPP2, PPP1 forgiveness, as well as the credits. So look at that checklist is a nice little summary of documents that you would need. You want to go ahead and write this email address down. We'll tell you why at the end. This is not the email address that you're getting our reminders from. So you most likely, unless you've been tuned into our channel back to March, you don't have this email address. So write it down. We'll be using it only for today. You might guess what it's for, but nonetheless, write that email address down. And then disclaimer of the obvious, I am a CPA. I wish I could be your CPA, but I'm not. And I do want to make sure that you are keeping in mind that anything we're going through, informational purposes, it's meant to put you in the right direction, help resolve some things for you, but work with your advisors. Everything is effective as of today. Why am I saying that? Well, I got up at 4 a.m. this morning to update this seminar for what got released last night by the SBA, which was the second draw application for PPP. And then 72 hours ago, the SBA came out with some IFRs, which I've incorporated into this. So I had all the materials written, and then I've updated it twice before I even presented it for the first time today. So things are moving quickly related to this, but I'll let you know what it is that we're still waiting on. You'll have that very clear idea. Wait to submit any of your questions because I'm most likely going to go through potentially things that will answer your questions. So we will let you know when it's time to answer the questions. This morning I presented this seminar and it did take more than an hour because I have put a lot more information into this than can be told in an hour. But know this, I will answer questions for an hour, and then we'll have an opportunity for hopefully everybody, to get their questions answered. But politics, we're probably getting close to where we're going to be past any kind of heated, I don't even know what to say, you know what I'm talking about, but we just want to keep political comments out of the chat. Note this, today we're going to be engaging in tax avoidance and tax loopholes. But what I want you to know in part of the education process is that tax avoidance and tax loophole, look it up, is simply using the tax laws to reduce your tax. So what we're looking at are things that are made available. Some are going to be sound too good to be true, but they're out there. We're going to take advantage of them. We're not going to conduct anything that puts us in a position of tax evasion or tax fraud. So a little bit of education there. I do want to set the stage that anything that I'm going over is related to federal taxes. We're going to assume the cash basis. We're going to assume tax basis, and it's simple math. I know that there are some potential examples that I'm providing that if we were doing it in a real world, there could be some other factors that would adjust the numbers, but we're going to do things in simple examples. I also want to set the stage for LLCs. You want to really grasp this because there are a lot of people out there, including people that have been in practice as attorneys or CPAs or EAs, tax professionals, bankers, insurance professionals, investment advisors. And when you say, well, how are you taxed? And they say, well, I'm taxed as an LLC, would be the same as if I said, well, hey, what state are you from? And you say, well, I'm from the United States. You wouldn't have told me what state you're from. So know this, an LLC, remember this forever, but you really need to really keep this in mind, because if you're just going with, well, I'm an LLC, and then you start making some assumptions on how PPP2 applies to you, or the forgiveness, or even the EIDL, you could end up in the wrong line, getting the wrong amount. So you really want to pay attention to how you are taxed. An LLC is a phenomenal way to set up your business. All of my clients as of the last 10 years are all LLCs, but an LLC can be taxed as an S Corp, a C Corp, a partnership, sole proprietor filing a Schedule C, a Schedule F, can own real estate filing on Schedule E, can be disregarded entity, a single member. Think of it like a chameleon. It can be anything. Yes, typically when we hear the word single member LLC, we may think typically that means Schedule C, but know this, a single member LLC just means that one person owns it, which can also be an S Corp or a C Corp. So just know this, especially when you're asking your questions, that you can say I'm an LLC, but you want to know how you're taxed. How you're taxed is what forms are you filing. So today we're going to focus in on the self-employed, which is those that are filing Schedule C or Schedule F. I also want to make sure that we're all on the same page about what a self-employed individual is, because this also makes a huge difference when determining things related to PPP 1 and 2 and forgiveness, and a little bit into the EIDL, for sure into some of the credits that we're going to talk about. So know this, a self-employed person is not just somebody that owns their own business. A self-employed is not an employee of their business. So many say, well, I'm self-employed, and maybe outside the circles of the IRS and the SBA and the financial world, that would just simply mean I own my own business. Know this, that when you're self-employed, that means in this world of SBA and in the world of the IRS, self-employed means you file a Schedule C or Schedule F. You can be an LLC that files a Schedule C or a Schedule F, but self-employed means you're subject to self-employment tax filing a Schedule C or a Schedule F. When we're talking about this, the self-employed is subject to self-employment taxes, which is the 15.3%. When you have an S Corp and a C Corp and a partnership, those are not self-employed entities. There is not anybody that owns that would be considered self-employed. The one thing I also want you to also keep in mind, which is key related to forgiveness of either PPP as well as getting round two, is there's no such thing as a 1099 employee. That is like saying that you're a man and a woman at the same time, or you're also a unicorn and a zebra at the same time, meaning you're either one or the other, at least biologically. So from a 1099, when I say biologically, 1099 means you're an independent contractor, period, the end. There's no such thing as that you're a 1099 and also an employee. Why is this key? Because when we're seeing language about an employee, it is a W-2 wage employee. So employee means only in any world a W-2 employee, meaning they have wages that are being paid to them, taxes withheld, quarterly reports, annual reports. If you have someone that's an independent contractor, there's no taxes withheld, they get a 1099 at year end. There's massively distinct differences there. So know this, as the self-employed, you're not an employee. You are a 1099 kind of part of the world. So whether you get 1099s or not, 1099 world is self-employed. So it's key to know that. Now, I also want to set the stage of what is a tax deduction versus a tax credit, which is better. So a tax deduction is going to be something that reduces down your taxable income. So if you had a $10,000 deduction and your tax rate's 32%, well, that's going to save you $3,200. Now, if you are in a set of circumstances where you have a $10,000 tax credit, that's going to reduce down your tax dollar for dollar by $10,000. So typically in most circumstances, a tax credit is going to be more beneficial to you than a tax deduction. And it'll be key because we're going to talk about some tax credits today that it doesn't seem that anybody's talking about, not really reading much about it. And maybe there's just some confusion about it. Maybe we'll hear more about it during tax season, but typically that's when it could be too late. So you're here today, and and this sounds funny to say, but I'm proud of you for being here today because you're wanting to stay in front of this. I appreciate your leap of faith to come on to a Zoom with me and go through this information. But these tax credits I'm going to talk about at the end are juicy, meaning they're going to be helpful to you, and probably most of you are going to qualify for them. So we're going to talk about PPP, the PPP forgiveness, these tax credits. We had the Consolidated Appropriations Act that came into play on the 28th into law. And then since then, as I indicated, we've had a number of other things, but that has been incorporated into our seminar today. Now, I want to just touch on some things in general related to the PPP program, which includes PPP1 and PPP2. So out of the new law that came into play, what has been a wonderful aspect has been more of a benefit for the employers, because in the old law, PPP forgiveness had no tax effect for the self-employed, meaning no one was picking it up as income, no matter how you were taxed. But for the self-employed, because it was based on your net income, you were not having to later pick it up. You weren't having to reduce down your deduction. So the employers, so if you happen to be a self-employed who also is an employer, meaning you have W-2 employees, this is good news from that perspective, because still none of the PPP forgiveness is considered income. And there is now no reduction of our deductions for the PPP. So we now can take full deduction of whatever we got on the PPP with zero tax effect. And then the IRS did come out and basically said, hey, we agree with all that. It also put it to bed for the self-employed. There were some that were saying, well, is this actually the case for the self-employed? Well, it is all super clear now. On the webpage that you have access to that has a bunch of resources and links, you will find that IRS revenue ruling. And that just came out, I guess at this point, about 72 hours ago. So you guys are getting red hot new information. Now with PPP1, what came out of the SBA, the SBA interim final rules, IFRs, that came out again, maybe 72 hours ago as well, we can reapply for 1.0. Now, here's the catch. You had to have already gotten a PPP 1. So this is not an opportunity to now go get PPP 1. But if you've already applied for PPP 1 and you got an amount and you've not filed for forgiveness and have not achieved for forgiveness, you can reapply for PPP 1, but only to the extent of the amount that you would have gotten if you would have known a rule that came out after you got the money, or there was an incorrect calculation, in essence, that you didn't know that you could include something to then get more PPP. So this is an opportunity to get some more PPP for those that already have the PPP 1.0, that haven't gotten the forgiveness. And an example of that would be somebody that is self-employed and they have W-2 wage employees. And many self-employed got the PPP based on their net income of Schedule C, but then didn't get PPP 1 for the employees that they have. And so that's an opportunity for some to go back. Why is that important? Well, there could be some that don't qualify for PPP 2.0 because of what we're going to talk about in terms of the reduction in gross receipts that is then required, but didn't get the full amount that they could on PPP 1. So no, this is not a, can I go make my case to the bank? I've hit hard times. Can I get some more PPP on round 1? No, it's just simply that if the calculation wasn't done correctly. Now, in the prior law, we knew, and in round 1, the self-employed are able to be included. We know that that is the same for PPP 2. One of the advantages to PPP 2 is that we get to do a calculation of what the PPP could be for 19 based on those numbers, and then what would it be based on 2020, and you get to take the higher of. We'll talk a little further about this, but the businesses that start with an NAICS code of 72, which I will tell you more about, they get to use a factor of 3.5. I'll hit more into that later. The thing to note, everything that's in green has been added in the last 72 hours. That's why I'm noting it. But with the PPP 2.0, 60% still needs to be used for payroll expenses. However, no, for you as a self-employed, if you get the money based on your Schedule C, line 31, divided by 12 times 2.5, which is how the calculation goes, you're just automatically going to get full forgiveness, because for the self-employed, it's simply a calculation. The 8-week and the 24-week make no difference in terms of how long it's meant to last. You don't have to do a draw. You don't have to show that you paid yourself, because it's not possible. You're not an employee, not possible to be one, not possible for you to have payroll. So again, what's the same for PPP2 is that for the self-employed, you're going to get your money, you're going to make the same calculation for your forgiveness, and you're done. So you don't have to worry so much about this. You don't have to worry at all about the 60%. Now, for self-employed that have employees, then the portion of your PPP that you would get based on the employees, the W-2 wages that you're paying, well, that portion of the PPP you would need to meet this qualification. Now, they have expanded the uses of PPP to include group life, group disability, group dental, group vision. But for the self-employed, it's irrelevant. So if you hear about some additional opportunities of what the money can be spent on, it's irrelevant for the self-employed, because you're going to get your money. And again, your calculation of getting it is the same as the forgiveness. You're good to go. I do want to note, because it is being discussed again, do you want the 8-week option or the 24-week option? Well, technically for the self-employed, we don't need to worry about, well, does that mean I have to have it last for 24 weeks? Would it be better to do the 8 weeks because I want to get unemployment? Know this, for the self-employed, the 8 and the 24 is simply your options. All it means is that as the self-employed, you want to select what's called the 24-week option. To be honest with you, you're just saying it out loud and you're including it in your calculation. There's really nowhere on the application to say I'm an 8-week or I'm a 24-week. But technically, The reason you want to select the 24 week, and so now I'm going to take the word week off. You want to select the 24 option because the 24 option is this for the self-employed. Line 31 divided by 12 times 2.5. The 8-week option is you take Schedule C divided by 52 weeks times 8 weeks, which is the old calculation, which is then only an automatic forgiveness of 74%. Here's your takeaway. The self-employed PPP should have no effect on PUA, no effect on the unemployment unless your state is specifically telling you that. So you should not care about taking the 24-week option, but that's going to give you that extra comfort that you're going to achieve that immediate forgiveness because of the calculations being the same. So for PPP1, it was a 1% loan, possibly compounded. We would, on any unforgiveness amount, pay it back over 2 or 5 years. Under the new law, the interest is not compounded on any portion that is not forgiven. We know that for the self-employed, there could be some of you that inadvertently got more than what you qualified for because of the early aspect of confusion with PPP. And so you very well may have an amount that you do need to pay back, but under the new law, whether it's PPP1 or PPP2, the interest is not compounded. Under PPP2, it's automatic. The repayment's 5 years. And then there are expanded uses further on what the PPP can be used for. But for the self-employed, it doesn't matter because your PPP amount that you're getting is based on your net income. You don't have to come back and prove any of these things because they don't apply to you unless you have employees. And in the scope of this seminar, as described when you signed up, I'm not really addressing Schedule C filers that have employees because I have another seminar that's for employers that addresses any of those issues. So really the approach that today and everything that I'm talking about today is on the self-employed side on that net income. All right, so on the forgiveness, the reason that I just wanted to point this out is that the law made it clear that the forgiveness rules related to 1.0 that we now get to take advantage of are going to be the same for PPP2. For the self-employed, it never had a tax effect. So it's more driving home that it still will not have a tax effect. On the reapplying, here's another advantage or situation where someone may want to reapply is on Schedule F. It has been expanded by the SBA here in the last 72 hours, and this almost doesn't read right, but farmers that file Schedule F can apply for PPP based on their gross, not their net. They can apply based on their net if they want, but they can apply based on their gross. So this would be a great example of somebody that if they got PPP already, they haven't gotten forgiveness from the SBA, therefore they can go and reapply and then base the request for PPP 1 or 2 based on their gross receipts. Now, with the PPP 2 and the reapplying of 1, that's all set to end on 3/31, and then 2.0 is expected to open up either Monday, Tuesday, or Wednesday. Probably what will happen is the SBA will open the portal maybe late Monday afternoon, and then by Wednesday, everybody will be trucking on that stuff. So now let's go ahead and deep dive into PPP 2.0. So on the web page, these are the materials that you have. What you're going to notice is probably at this point, maybe 16 hours ago, the new PPP 2.0 application or updated application has been released. So when you click on that on the web page, it will take you to the landing page on the SBA of the new Form 2483. And I updated, maybe I already told you, I was up at 4 a.m. this morning and updated the seminar today to incorporate the new Form 2483. So we are going to go over an hour, but it's because I've incorporated more information related to PPP2. So you have a link to that. The SBA came out with a memo to go along with this, which is a separate resource there. Then the SBA came out with guidelines on the 6th. So I guess that's maybe 100 hours ago. And then we've got 2 Excel spreadsheets that I've got here for you. So if you'll notice, the top 3 things here are literally hot off the press. So I'm glad you're here today. I also just want to point out to you as a resource, if you want to pull up any of the forms that I'm going to be going through today that will be up on the screen, I just thought it'd be nice that you could have some easy, immediate access to Schedule C for 19 and 20, plus the instructions. And then the IRS has a really nice page for the self-employed, and that's a landing page to the IRS that just talks about everything that the self-employed should be aware of related to tax deductions and where to get help. Now, when we're talking about applying for 2.0, what's the same for getting the loan on 0.1 or 1.0 and 2.0, other than the farmers filing Schedule C, filing Schedule F, sorry. Farmers filing the Schedule F can go based on the gross or the net. But I'm going to set that aside. For the self-employed, it's based on Schedule C or it's based on Schedule F, line 31 or line 34. And it cannot be based off of Schedule E. Schedule E, page 1 is for rental activity. It's not subject to self-employment tax. That's why it does not qualify for PPP, because it's not self-employed income. Now, this right now, immediately do these 3 things. Hopefully you've done it already. If you've seen any of my videos, you want to make sure that your bank is participating in PPP2. If not, find a bank that is, and then ensure you qualify. There's a 25% reduction in gross receipts test. I was a little bit surprised that on the application, you actually do have to identify the quarter that you're down, and you have to identify the sales for the quarter in 2020 and the sales in 2019 to, in essence, show that you are down the 25%. We don't have to provide any documentation, but we are having to identify that information on the application for PPP 2.0. And then if you do qualify, then you need to figure out what is the amount that you qualify for. And we know that we get the higher of 19 or 20. And we then want to immediately apply. So if you now have the application and you can figure out the information, hopefully after this or during this, that was kind of the point of the application or the checklist that I gave you. So with this information, I'm hoping that you could get your PPP 2.0 application done during the seminar or today or tomorrow and get that to the bank and be hopefully first in line. So it is Form 2483 SD. We have it simplified for those loans that are 150,000 or less. So for the self-employed, the max loan for 1 or 2 is 20,833. How did we come up with that, JJ? Well, we know that the maximum that can be included, no matter the amount on your Schedule C, the maximum that can be included is $100,000 of net line 31 on Schedule C. So if you take 100,000 divided by 12 times 2.5, that's 20,833. There is the exception now if you have an NAICS code, which we're going to talk about, that starts with a 72. Well, then your factor is 3.5, and you would be able to borrow more than that threshold there. But here's the point: unless a self-employed has employees, you're going to hit this simplified method of 150,000 or less, which is this. You don't have to provide any documentation when applying. If your bank is asking for it, I don't know what to say other than it's not required. So you don't have to provide anything. You don't have to provide a Schedule C. You don't have to provide any documents to substantiate your decrease, but you are going to certify that you do meet the requirements. And then on the back end, for loans that are 150,000 or less, you will have to provide documentation to show that you were down at least 25% in any given quarter. So here is the new application, literally hot off the press, came out late last night. And so we are going to walk through this. So there's a little gander to it. I indicated earlier that you do have a link to it. Let's look at the first section here. So I'm going to give you kind of a rundown of what seems to be possibly a hiccup for you, that we don't have time for it. You don't have time for hiccups. So you're going to see this section is the NAICS code. That comes right off your Schedule C or Schedule F, and I'm going to show you where. But know this, it's on your Schedule C. Not really possible that it doesn't have one unless you put all 9s in there, but I'm going to then show you how you find your NAIC code. Here's the deal. If your boat is going under and it's taking on water, you can't figure out if you're going to use the life preserver that has a hole that's 12 inches in diameter or a life preserver that has a hole of 13 inches in diameter. The only reason truly the NAICS code matters, not that you just want to do it incorrectly, is if you have the 72. So by putting your code down, unless you're in that hospitality restaurant business, you don't need to lose sleep over it. You can't hold on to your application and be worried and concerned, incorrectly so, while your boat just went underwater and you absolutely drowned because you froze, not knowing if you should take which life preserver with 1 inch difference. I'm going to show you where to get the codes though, but you can't be overthinking this. There is zero time for that. Year of establishment. I know it tripped up some self-employed last time. Year of establishment, okay, is what year did you start your business? Boom. It doesn't really matter. You know what matters is they want to make sure that you at least started it or had it on February 15th, because you have to have had a business on February 15th of 2020. So if you started your business in 96 or maybe it was 98, you can't sit around and then dig up records and call your attorney who's on vacation and now you don't know what year you started. My point in telling you this is go with what year you know you started and move on. This is not something that should trip you up. Now, most of us probably know what year. And if you're like, well, there was a year that I started, I don't know that I filed anything, well, then go with the year that you filed. But it can't be something, you're making a decision in 30 seconds and you're moving on. Now, I am a little disappointed that we're having these different descriptions put up here in the check in the box, because it really makes no true difference in the sense that you're either self-employed or you're one of these other entities. So know this, the sole proprietor, the independent contractor, the self-employed individual are all the same thing. These are all, in essence, those that are filing Schedule C. So if you're self-employed, you file a Schedule C, pick one. I will tell you that it makes zero difference in kind of in a general term. An independent contractor, somebody that really doesn't have an office anywhere, they're just doing stuff every once in a while. It's a side gig, most likely. The self-employed individual, somebody that probably in normal circumstances works from home. A sole proprietor would be somebody that has an office somewhere. But I'm just telling you right now, close your eyes, throw a dart, and whatever dart, wherever it lands, whatever it's closest to, pick it, because this can't be something that trips you up. Sole proprietor, independent contractor. For my clients, if they're filing a Schedule C, we're checking the box for self-employed individual because they're a Schedule C. Now, when we're now talking about your EIN, I'm going to show you where to look, but this is if you have a separate tax ID number. You either do or you don't, and if you do, it's on your Schedule C, and I'm going to show you where to look. So this is not your Social Security number if your business has an EIN, and with Schedule C filers, it's unsure, but I'm going to show you exactly where to look. But again, it doesn't make too big of a difference, meaning if you're like, well, I don't know, have an ID number or not. Well, that probably means you don't, but we're going to take a look at that nonetheless. Now, I am going to run through the calculations. We're going to come back to this section, but this is now kind of the middle section of the new application. And the biggest thing for the self-employed is, well, what box am I going to check for what the purpose of the funds are? So you heard me tell you that the self-employed is not an employee. The self-employed can't have payroll costs. That's all true. But for the purpose of this form, your category of line 31 of your Schedule C or line 34 of Schedule F, that category that it falls into divided by 12 times 2.5 falls in a category of payroll costs. Technically, this doesn't matter truly, but with anybody that's self-employed, the box that you would want to check is the payroll costs. If you have a bank that says, well, wait a second, do you have employees? Because you check payroll costs and you go, no, I don't have any employees. And they're like, well, then maybe you need to check other. Then you're going to erase it. You're going to check other and you're going to move on, because all the things that we've gone through right now, it's amazing how it can trip everybody up. And then what happened? The boat sank. The money ran out because you were trying to worry about what box to check when none of it's technically relevant to the process of actually getting your PPP2. So don't hear me at all as, well, none of this matters. Hear me as I'm giving you the answer, go with it, and get your PPP2 put into play. You also are going to need to know, if you got PPP1, what is your SBA loan number? Now I'll tell you this, if you have your application all filled out and this is the only thing that you're missing and you're using the same bank, get them this application and say, hey, by the way, can you fill in my SBA loan number? If you're going to a different bank, then you'll need to figure that out. It should be on your loan documents, but this can't be another reason that all of a sudden you're looking at Thursday of next week and you had everything done other than this loan number and you didn't get your application in. I don't think the money's going to run out in 3 days, but there's no more to put in the pot for PPP2. It is less money that's made available, is less money that can be loaned out. They are setting aside money for the self-employed, but I do want you to have a sense of urgency. I'm sure you hear it in my voice, to make sure you're getting this in as soon as possible. And I will tell you this, the self-employed, the ones that file Schedule C, unfortunately, fall typically at the bottom of the barrel on PPP or really anything. You probably are going to understand what I'm saying, being self-employed, meaning you don't have a big loan. The banks are going to probably still want to take care of you just the same. But at the end of the day, you're not a big fish, most likely. And I don't say that with any disrespect. What I say it as, you have to be stronger. You have to be more diligent. You need to make sure that you're staying in front. You need to make sure that you're raising your hand. And that also means you want to get your information in sooner, quicker, get it in the door to the banks so that you will get this money. I don't see that if it runs out, there's going to be any more money to put into it. Now, one of the things that's interesting is this section, which we're going to go through, but it's the reduction in your gross receipts. We know that that was the case, but I was surprised to find that we have to disclose this information on the application. One of the great things that I appreciate you coming to the seminar today, even if you apply, were at one of my prior ones, is that I'm going to literally walk you through the calculations and then literally show you where to put that information on the application, because I've taken very seriously that I want you at the end of this seminar to be able to fill out your application and send it to the bank. That's my intent for you here. You're going to see also on page 1, it's going to ask for who are the owners. You probably know, but it's you. And let me back up. Your ownership percentage is 100%. What's your title? Owner. What's your EIN or social security number? It's your social security number, because right there, they're not asking for the information on the business, they're asking it on you. So you as a self-employed are going to put your social security number, you're going to put your home address there. If you have a different business address, you'll use that different business address up top, but you're going to use your individual address right there. Technically, it doesn't really matter on the address, they just want to know where to get a hold of you. And then on the PPP2 provisions, anything you're going to see in green, which is getting ready to be a whole bunch, is new information in the either last 16 hours or probably no less than 96 or no more than 96 hours old. So we know we have the 2483 SD that you're applying with. This doesn't really matter for the self-employed. I have several businesses. One of them is a Schedule C and self-employed. So I'm there right with you in these regards, but we're not going to have more than 300 W-2 employees. We know the factor's 2.5. The businesses start with the 72 have the factor of 3.5. That just means that they would be taking Schedule C line 31 divided by 12 times 3.5. There'll be no mystery on who qualifies that here in just a few minutes. New, the borrower gets to choose which Schedule C line 31 or Schedule F line 34 they get to use, meaning 19 or 20, they get to choose and pick the higher of. What's also new, check this out. You ready for this? Because this can make something go lightning fast, is that if you're going to use the PPP based on the 2019 number. Now, I'm not talking about your gross receipts test. I'm just talking about your loan. And this is on any dollar amount, FYI. But if you're going to base it on 19, you don't have to provide any documentation to the bank, no matter the dollar size request of PPP 2.0, because the bank should already have it. Now, that does assume you're going with the same lender. Now, for us that are 150,000 or less, we don't have to provide any documentation at the time of PPP 2.0 being requested, but just as a side note, still on the green as in brand new, if a borrower is in business all 4 quarters of 2019, they can use the calendar year to determine the 25% reduction in gross receipts test. Now, I'm going to have some very specific examples for you to drive that home. What I don't want you to hear is that you have to be down for the year. This is simply that if there are a number of businesses out there, they're like, you know what, pick a quarter, it was terrible all around. So if you just know that overall your year, your gross is already 25% in total, less than 2019, what the SBA is saying is, and it's specifically to the self-employed, the SBA said, this is to benefit the self-employed. Now, you may not qualify if you just look at it annually, and we're going to look at an example. Know this, it's either or, and whatever benefits you most is the point. The one thing to note, though, is that if you are going on an annual amount of decrease, then what you will be required at the time of forgiveness is to supply the tax return, your Schedule C, or if it's another entity, you'll have to present your tax returns at the time of forgiveness. Well, that's no big deal. You should have them anyways, and it should all match up. We're going to continue with green language because of new information. Gross receipts are based on whatever is reported on your tax return. So whatever your method of accounting is for tax basis, that is your method of accounting for gross receipts. We don't get to come up with new rules on what counts or don't count. So when you're looking at a Schedule C, what you include in line 1, normally, that's going to be what your gross receipts are. We do get to, it's clear by the SBA, take returns and allowances. If you don't know what returns and allowances are, then you don't have them. Most people in cash basis aren't going to have return and allowances. Most of the time this applies to the accrual. So you don't have to get really too caught up on making sure that you're paying attention to that aspect, because it really just most likely isn't going to apply. What was made clear by the SBA, because there was talk that, oh, well, this is going to help even new businesses, because the law indicated that if a business didn't exist during the 1-year period preceding 215, that they would qualify for 2.0. Wrong. What the SBA clarified in their IFRs, that's the interim final rules, is that the business still must have existed on 2/15/2020. So it could have started in 20, but it still has to be a business that existed on 2/15/20. A business that's permanently closed, planning to be closed, going to be filing a final tax return. And I don't just mean from a technicality, they decide not to file a final return so that they can get PPP. Remember this, if the business is closed, it's out of business, the Paycheck Protection Program is meant to help preserve the payroll and the pay and the employees that are on there. So if a business is closed, they're not going to qualify for 2.0. What's interesting there is you may have a business that's closed and they can say, well, I have payroll in 19, I can go ahead and get PPP. You would not be able to do that. It would be considered basically wrongdoing. Other provisions, again, what's in green is 96 hours or less old. Gross receipts are based on the tax return. Let's see. Oh, scratch that. Down at the bottom here. Made clear by the SBA, PPP-1 does not need to be forgiven. The application for PPP-1 forgiveness does not need to be submitted beforehand. Banks are thinking that they can get away with it. I don't know why banks think sometimes they can just make up their own rules related to this, but the SBA went out of their way in the interim final rules and indicated that they're not allowed to request, or I shouldn't say request, they're not allowed to require it to be forgiven or that you would submit anything. Now, we understand as the self-employed, well, who are we? Well, here's who we are. You can go to another bank is what you can do. One of the things that's interesting, and you read in the minutia, is that, and I read this so recent that I don't have it in the materials, but actually this time around, if you apply at more than one bank, you've not done anything wrong or incorrect. So if you're unsure about your bank's dragging their feet, somebody's playing golf, they're gone for the week, they're being goofy, then get to another bank, because what the SBA said is they're keeping up with this. They're only going to give you one PPP. So if you apply at several banks, in essence, what they're saying is you won't get in trouble for that. So if you got a bank and they're making you hiccup, then do an about face and go find a different bank. You don't have to necessarily move your accounts, but I would suggest a smaller bank, a credit union, a local bank. They're simply probably more hungry for new business. In the law, it indicated that borrower must certify that they have used all of PPP-1. The SBA in the IFRs said and added or will use. And the reason for that is if somebody has money left over or they didn't spend it all properly, and I don't mean on purpose, but they don't achieve full forgiveness. Well, the way the law would be reading on that is that they didn't use it all for PPP-1. Therefore, as the law was written, it would preclude people from being able to qualify for 2.0. Know this, that is not the case. It is will use. Now, I don't want to get in the weeds on this because it really doesn't probably end up happening a lot with the self-employed, but for the benefit of our CPAs, EAs, tax professionals, or those that are helping other people besides themselves, note this: if you have a bank that gets in a hiccup related to this, or there's a large amount that's going to be either not forgiven or having to be paid back, kind of the same thing, there's provision basically that whatever is not going to be forgiven can just be an amount subtracted from what they would get otherwise on PPP-2. So someone gets $10,000, they know they're not going to get forgiven for $2,000. See, this really doesn't apply to self-employed other than maybe you got too much because your numbers were not up to whatever the standards were eventually in terms of that line 31 of Schedule C. Know this: if you have $2,000 that you have to pay back, you can just pay it back and go through the normal channels. There is the opportunity, and I doubt that anybody's going to be aware of it at the very beginning, but there is the opportunity to go, well, if I owe $2,000 back, okay, but now for PPP-2, I qualify for $10,000. What the SBA is indicating is what they'd rather do is go, okay, you qualify for 10, but you know what? Don't pay us back the 2 because we're just going to give you 8. Does that make sense? So don't get confused by it. For the self-employed, if that is going to cause a hiccup, then move on. For the self-employed, you really don't have to worry about it. I just know we have a number of us here today that would probably benefit from that knowledge. Made clear, little typo there, but with PPP 1.0 or the EIDL grant, they're not considered gross receipts for the 25% test. So the SBA went out of their way to make it clear that your PPP that you got, any EIDL grants that you got, are not considered gross receipts for this. Now, I'm going to extrapolate that any of these other adjustments due to payroll tax, the tax credits that we're going to see later are technically included in gross income, but not for these purposes. Also, there are some state grants that would be considered a part of gross income. So what we have to remember is that even though the SBA has indicated that your definition of gross receipts is your basis of accounting that is different from saying that your gross receipts on a tax return is your gross receipts for this test. JJ, what does that even mean? Here's what it means. Your gross receipts for the 25% test is money you get from a customer, not from a benefit that's going to be taxable to you. Okay, so you should know as a small business owner, there's really no way you wouldn't. This money is from my customer. This money's from this client. This money's from this sale. That's the money that they're talking about when they're talking about gross receipts for these purposes. Just know that with the PPP, your name will be included with everybody else's. It'll be made public that you got a PPP, et cetera. There's going to be $2 billion set aside for those that have 50 or not more than 50 employees and the self-employed. So that's great. That allows the self-employed maybe to be served a little better, a little quicker. I know that when I was kind of getting more views, for lack of a better word, on YouTube, it sure seemed popular that self-employeds were just running around from bank to bank and getting the door slammed on them, and no one was really caring about trying to loan to them. Well, now this puts the banks in a position of being motivated because there's money specifically set aside. Now, for the PPP2 loan, I've got a section in here, this slide talking about the forgiveness. What I just want you to know is that as of now, the manner in which we're going to be seeing the forgiveness on 1.0 will be the same manner in how we will have 2.0 forgiven. And what does that mean? Well, out of the stimulus, we have a simplification of the forgiveness, which is this. It's a certification. You do have to put down the amount of what you qualify for forgiveness. There's going to probably be a misinterpretation by many that, oh, if it's 150,000 or less, I just put my loan amount and it's automatically forgiven. Couldn't be farther from the actual truth, because the forgiveness amount is still the calculation of your forgiveness amount. That's why it's important that we're going to go through the PPP1 forgiveness calculation so that you put down the correct amount. This is your takeaway from this slide. What you're experiencing in the ease of PPP1 forgiveness process is going to be the same for 2, except for everyone, you will need to provide proof at the time of forgiveness that your gross receipts were down by 25%, but you won't be providing any other documentation besides that. All right, I had promised you that on Schedule C, I'd give you a link to it, but on Schedule C, remember I had indicated to you that on the application, you have to put down your NAICS number. So on Schedule C, it's going to be the same area on Schedule F, but that's that box B. And the reason I wanted to point it out to you is because if you notice right there, it doesn't say NAICS. It says enter the code from the instructions. So this is also why I gave you the instructions, because in the instructions, it has all these codes. So now you don't have to be worried and going and searching for it. And if you go to the instructions and you go to line B, because see that arrow is on section B of your Schedule C. If you go there, it then indicates that you can click there and it'll take you directly in the instructions, or you can just scroll. It's not that far away, not that far into the instructions. So if B is 99999, which is acceptable, then find your NAISC code. But I'm telling you right now, give yourself about a 30-second time and pick one that's close to what you're doing. It's going to be obvious, and put it down, because all that really matters is the SBA just needs to know, are you a code 72? What's code 72? Well, here they are all listed. And as you can see, it's hospitality related. So if you haven't been using the 72 code, then you're probably not a 72. Now we've got somebody that's on with us that is in the barbecue business. They most likely should have a 72 on their Schedule C. Now, if you do want to look up the NAICS code, right? So let's say that you are wanting to spend more than 30 seconds. You want to invest some time into this for whatever reason. And I'm not mocking you, but I'm just saying, if you feel like you really need to dig deep and you're now concerned about your NAICS code, I've given you a link right there that you can go to the website and search it to your heart's content. You'll see that there are tons and tons and tons of codes. And I'm just telling you, for the purposes of PPP, all they really are worried about is, are you a number 72 or not? So now we're going to get into that 25% analysis. So I don't want to spend a lot of time on this because you're going to be able to go back to this slide right here. But if you're not in business in the first and second quarter of 2019, here's how you compare. So you would compare first, second, third, and fourth quarter of 2020 to third and fourth quarter of 19. Well, JJ, how would I do that? Well, you would do that as your third and fourth quarter is now going to sit there, okay? And as any of the first four quarters or the four quarters in 2020, any of those less than either quarter of third and fourth. So on and so forth. So if you weren't in business the first, second, or third quarter of 19, here's how you do your comparison. If you weren't in business at all in 19, but were in business on February 15th, here's your comparison. So I wanted to solve this for you. Many small businesses, sole proprietors, self-employed, may have started your business in 19. You don't need to spend much time trying to figure out what your comparisons are, because I solved it right there for you. And this is directly from the stimulus law. Now, you may have signed up right last second, and I appreciate that, but on the web page, I want to make sure that you know I have a checklist on there. I talked about it earlier. This checklist is helpful because, in essence, it's what information should you gather up. Some of the information that I put on the checklist to gather up, you don't have to turn into the bank. But what we don't want to do is be in a position of saying, well, I'll get it when I need it. I'll give it to them when they ask for it. Okay, but at the same time, it would be better just to upfront have the documentation that could be possible. It's not a ton, but you're going to want your PPP 1.0 application, starting with, it'll have your SBA loan number on it that you're going to need when you're doing your PPP2 application. Also, you're going to want your 2019 Schedule C, because that is what is going to be needed for the PPP1 forgiveness nonetheless. And it's going to be potentially something that you would be basing 2.0 on. Now, for a lot of us, given that we're on the 9th of January, you may not have your Schedule C or Schedule F done, but you may have your profit and loss. Well, you're going to want to giddy up and figure out what your net income is. So unless you have actually prepared your C or F, you can base 2020 based on a profit and loss. In the checklist that I provided on the last page of that, I put in a very general P&L for you. So if you need to put something together, I'm just giving that to you as a guideline. If you're using QuickBooks, of course, you'd be able to pull that information from there, because in essence, you're needing this information not only to determine your gross receipts test, but also then to determine what amount of PPP are you going to get. You need to know what to expect for 2020, and therefore what you want to be sure of is to be aware of what deductions do you have that maybe aren't necessarily what you spend money on. So what does that actually mean? Well, look at your Schedule C on 2019, because you may find that on line 30, there was a home office deduction. You may see that in line 9, there was mileage and vehicle expenses, which is more based on a per diem on the mileage. There might also be depreciation. You may have bought assets in 19 that reduced down your income. You may have bought assets in 2020 that reduces down your income. The reason this is important is when you're now potentially estimating what your net income is going to be for Schedule C, you want to be aware of what other tax deductions may end up on that, because it's going to reduce down your line 31, which line 31 is your net income from Schedule C, which is then determining what your PPP is going to be for 2.0. So what is not gross income? This is in your checklist that I gave you as well. We talked about it, but loan proceeds, PPP1 is not. Money you put in the company, wages you received if you have a W-2 job. So don't think of gross receipts as gross receipts for you as a person. Don't think of it as you as a household. What you're looking at gross receipts is to your business, your customers. Unemployment that you receive is not considered gross receipts for the purposes of doing your test because it's not related to your business. You got unemployment because you unfortunately were in circumstances where your business wasn't doing as well. So in your mind, you might think unemployment is related, but it's not for these purposes. Unemployment is taxable. I'm not saying that it's not taxable. When I talk about what's not gross income in this slide, I'm talking about for our 25% test. So income that's not related to the business. So if you have multiple businesses and you're getting PPP on one of them and not the other, you want to separate that out. You want to be mindful that if you're getting state grants, it could be that it's gross receipts included on a tax return for tax purposes, but it doesn't necessarily mean that it's gross receipts for this testing. So take note that, and I'm going to repeat myself of what I said earlier, you are using your tax basis of accounting to determine what your gross receipts are, but you're not using the, well, whatever the gross receipts are on my tax return, that's what I'm going to include in the 25% test, because tax adjustments, tax credits, and grants, while are going to potentially be included in your gross receipts for tax purposes, that has nothing to do with this test when we're figuring out gross receipts comparing 19 to 20. Now, the SBA did indicate, and I'm going to show you here in a minute, that we can reduce down gross receipts for returns and allowances. Returns and allowances is typically not anything other than potentially a customer bought something from you and then they wanted a refund. We don't get to write off people that didn't pay us, because if you're self-employed, you're going to be cash basis of accounting, which means this: you don't recognize your income till you literally collected it, and you don't get to write anything off until you literally spent it. So returns and allowances really doesn't apply to the cash basis, which also means it doesn't apply to us in the profit and loss. You are looking at the comparison. It's calendar basis. It doesn't matter however you keep your books or whatever else you would think your method of comparison would be. It is strictly the calendar quarters compared. So this is back to the Schedule C. This is 19s because this is part of what we're looking at. So we have the line 31. We know that that is then what is based on the PPP1, PPP2, and the forgiveness. I'm going to point out to you, I don't think I got it to where it's circled, but if you look right below B, you know, I had pointed out B to you earlier and didn't point out D, but see, D is your employer ID number for your business. Of self-employed Schedule C filers, more often than not, you don't have an EIN. So you're going to look here and remember back on the application, and I said at the top of your application for PPP2, it says what's your EIN or social security number for the business. You're going to go with whatever's on your Schedule C, meaning if there isn't a number in the section D at the top of your PPP2 application, you're going to put the ID number that's in D. Rest assured, if you have a number in D, you will also have your social security number on there as well. So it's possible for you to have both. What I'm clarifying for you is that on your PPP2 application, up top is if you have an EIN, you're putting your EIN up top. And then down when you're listing who the owners are, you're going to use your social security number. And then on Schedule F, we know that it's based on the net, but then we also know that we can now base it on the gross. And if you'll notice here for any Schedule F filers, you see the same line B, that's the enter the code, that's the NAICS code. It would not be possible for a Schedule F to have a 72, I don't believe. And then you can see to the right of that is where the ID number is. So if there is the ID number, you just follow what I just indicated. Okay, now You can follow along with me if you'd like. If not, that's okay, because I'm going to put up on the slides the actual Excel spreadsheet piece by piece. But if you do want to open it up, you have a link on the web page. What you're going to want to open up is called PPP2 Gross Receipts Analysis. There's going to be 3 worksheets. And how do you find the worksheets? Well, when you open up the Excel file, and the reason that you're going to have access to this video for the next 30 days is so that if you right now are not going and figuring this stuff out along with this seminar, you're able to go back, listen, hit pause. So when you have your Excel spreadsheet open, if you're not super familiar with it, down at the bottom of your screen, you'll see 3 tabs: Method 1, Method 2, and the Annual Method. So we're going to go through these. When you open up the Excel spreadsheet, it's going to be protected. And all that means is you're not going to be able to make any changes to it. But guess what? It's going to be super simple for you to unprotect it because there's no password. So when you unlock it, you unprotect it, you've now made it yours. When it's locked, it's mine. When you unprotect it, it's now yours. Why am I telling you that? Well, in Excel, especially for those that don't use it all the time, it's very, very easy to override a calculation, a formula. So there is no way in shape or form I'm going to be able to guarantee you that once you unlock it, that you don't inadvertently override a formula. So all that means is that this is for example purposes, and you're going to use it as a guide. You want to check your math. This isn't complicated math, so check the math. And then if, for those of you that don't work Excel, when you open up Excel, you'll see at the top review. You click review, and then you're going to see this option for protected sheet. All you got to do is click on it. It's unlocked. There's no password, and then you can make changes to it if you would like. So now what's up on the screen is what is in that Excel spreadsheet. So that's why you don't have to have the Excel spreadsheet to follow along, because I put it up here. Now for me, numbers guy, I have put the numbers here on a month-by-month basis. Why? Why would you do that, JJ, if we only have to do it on the quarter? Well, the reason is that if I have a quarter for a client and I'm like, man, we're so close, I'm curious, well, what month is throwing us off? Do we need to go back? Because in QuickBooks, we know that the date something's entered into QuickBooks is the quarter it's going to end up in. No, I'm not talking about massaging and cooking and moving, but when we're now looking at this analysis, we would potentially really want to make sure that whatever's been reported in that quarter is tied to that quarter. So if you're looking at a bank statement and the deposit was made on the 1st, and on QuickBooks it got put in on the 31st, you might have a decision to make there. You'll just have to make your own decision. But the reason I like the month by month is that I have an idea of what quarters are possibly close if need be. So when you're looking at tab 1, which is what we're in right now, you're going to see that month to month, and then down below, you're going to see this quarter by quarter. So these are numbers that are just out of thin air. You'll see that I've listed quarter by quarter and then the total of each year. So I'm going to go through a method 1 and method 2. Know this, method 1, method 2 is not from the SBA, it's not from the IRS, it's not from your bank, it's not official. One's not better than the other. I literally made up the word because I just have to somehow indicate that I'm doing 2 different kinds of math. They'll have the exact same results. The reason I'm doing this is that sometimes we work, some of us with our left brain, some with our right brain. You may come up with your own method. You don't even have to use these. But what we're trying to accomplish here is now to do an analysis, and we need to be exact on it. We need to ensure that it's at least 25% reduction. So in this method 1, I've indicated what the differences are. And then in that formula is 2,000 divided by 30,000, which indicates, yes, it's down, but only by 6.67%, so on and so forth. So I've been able to identify the quarters. Yes, you would probably be able to eyeball it and go, there it is. So you don't have to complicate it, but I like to go, if possible, with this full analysis here. So I am just reminding you the method 1 is just my terminology. Now the second tab is method 2, and all method 2 is that I've listed the same 19 and 20, And then I've taken 2020 and I'm comparing it to the 75% mark of 2019. Now, those of you that think on this side of the brain immediately understand why I did that. But I've taken the 2019 column times 75%. That's 22,500. So I know if 2020 is above that, I don't qualify. If it's below it, I do. And again, I understand it's eyeballing it, but then we know that it is less. And as you can tell, the math works out the same, just coming from two different directions. We know that Q2 is the quarter that is down. Now, what came out of the SBA IFRs is this annual method. So it's if you're not going to find a set of circumstances where if you don't qualify on the quarter, somehow you're going to qualify on the annual. This is quite the opposite. If for some reason you don't qualify on the annual, well, then you can be in a position where you can go to the quarterly. But on the annual, these are the same numbers in example 1. So in the example that I just did, it was 144,000 and 137,000. So you can see as a year as a whole, this person wouldn't qualify. All that means is you now go do the quarterly method. The reason that you may save yourself a little effort is if I go with, or if you were to have numbers that were like example 2, where 2020's gross is 98,000, it's the only number that changed, then all of a sudden you're like, okay, well, the year's down by 31.94. So what the SBA is saying is, listen, if 19 and 20 compared, if as a total, you're 25% less or more, you know what? Just go with that and move on. You don't have to go through the exercise of doing the quarterly. But if you come out not qualifying on the annual method, then go to the quarterly. So we know that in this example, example 2, it is down. All I've done is the same kind of math at the top as method 1. I did the same kind of math down at the bottom of method 2. At the end of the day, you're trying to see, are you down by 25% either annually and or quarterly? All right, so with the Schedule C and the Schedule F, when we talk about gross payroll for the self-employed, it gets tricky here. And the only place that it gets tricky, and I just wish that the SBA would just come out with an application that's simply for the self-employed. But when you look at the application for forgiveness, there is a line item that says payroll costs. I think this is part of what's tripping up the banks. Remember, I told you earlier, your amount that's based on line 31, okay, goes in the category of payroll costs. Doesn't mean it's payroll, doesn't mean you're an employee, doesn't mean you have wages. It's just the parking spot that you're going in. So the SBA calls it that also for PPP 2. Nothing changes in what we talked about on the self-employed. If you have an employee that you pay wages to, then you're able to include that, and that is your traditional wages, but go with the mindset of payroll versus wages. Wages are on W-2. Yes, in most circumstances, payroll would mean the same thing, but I'm just trying to drive home for you, if you remember when I was showing you the application earlier, that you're in a set of circumstances where your number's going on that line item on these applications in the payroll cost. All right, Schedule C, it's line 31 only, meaning there's no adjustments from there. Schedule F, it's line 34 only. There's no further adjustments, no additional things that get to be included like health insurance or retirement plan. It's still simply that net. And then of course, if you have the code 72, then you have a 3.5 factor that you can use. All right, now we're going to look at the other Excel spreadsheet that's in your section of PPP2, and it's called PPP2 Self-Employed Loan Calculation. And just the same, I'm going to put everything up on the slides here. So if you're not able to open it or you're interested in opening it later and listening back, you absolutely can. So It's the same darn thing. It's protected. There's no password. You can unlock it, simple or unprotected, just as I had indicated earlier. I'm giving you all the little disclosures here. You go to review, click, unlock, there you go. Now it's yours. So when you pull up that Excel spreadsheet, you can see that we're doing the PPP2 loan calculation for the self-employed. And what I'm doing right now with clients is that I just have a column for 19 and I got a column for 20. So for us as the self-employed, it's Schedule C, line 31. If you're doing on Schedule F, then it'd be Schedule F, line 34 that would go there. So this is going to be our row A. And then right there, boom, we're into the calculation. We do need to know what our average monthly is because that's what's going to go on the application, as you'll see here in a minute. But you're then taking that line 31 divided by 12, and that's what is then our row B. It's simply row A divided by 12. And then we know what our PPP2 loan amount is. And this does all assume that you're meeting the gross receipts test of being down by at least 25%. So now we know when it says average payroll, the reason I'm using that terminology is that's what's being used on the application. So basically we have line B that is then multiplied by 2.5. You get the higher of. So we know that, again, just as a reminder, that it's 3.5 if you have code 7.2. So you would have to update the formula if you're using that. All right, so this is probably, if you want to mark down the time, if you feel like you're going to go back and watch this and maybe follow along, this would probably be the one time to mark. And so I think we're an hour and 20 minutes into it, where we're now getting into a little bit of the juice here related to the new round 2 application. So I'm pulling numbers from our Excel worksheet. That was the PPP2 loan calculation. I'm trying to make sure you know where we're getting these numbers from because we just went through 2 Excel spreadsheets and we're now going to pull information from both of them and put it on the application together. So we then knew what our average monthly was. We just did that. Average monthly was 81 and 55.83. We also know that the higher of was 2019, so we do know what our average is. So what we're going to do is go with the higher of 19 or 20, which 19 is what we're going with. So what to be made clear is that if we're going with 19 or we're going with 20, the numbers that are going to go on your application are going to be related to 19. Don't be confused with this is related to your gross receipts. This is the calculation of how much your loan's going to be. So on the average monthly, that 8,162 that came from our spreadsheet, that's what's going to go into your average monthly payroll. Guess what? It's called payroll. Again, it's not for us as self-employed, but that is still where you are putting it. And that's 8,167. Then the loan amount, which is the average monthly times 2.5, is then going to go there, the 20,417. Then we're going to take from our other Excel worksheet that we had, which is our 2020 quarter compared to the same quarter of 2019. So that's the other Excel spreadsheet that we're looking at. And really it doesn't matter which method I'm going to go with here because it's quarter 2 that is going to be used here on the application. So what they want to know is, as you can see right there in that little spot that just had the arrow, they want to know the gross receipts for the quarter of 2020. And then they want to know what the gross receipts are for the same quarter of the prior year. So we know that it's 16,000 for quarter 2 in 2020. And then they're going to want you to put down, well, what were the gross receipts then in 2019, which is 33,000. Now you'll notice right above that, they want to know what quarter is this from. So these are from quarter 2. So you're going to put in quarter 2 right here. So as you can see, this is the most important part of your application. We went through everything else up above and checked the box and ID numbers and what to check, all related to this. But this is what really matters. On the number of employees, we talked about that. I'm telling anybody that's self-employed, just put a 0. If the bank wants a 1, then do it. But nonetheless, these two things that we went through, you now have the worksheets, you have the calculations, we walked through it. You now have the application that you should be able to, today or tomorrow, get these numbers pulled together, because these numbers that are listed here, these 4 numbers, is really what matters in terms of getting this PPP2 relief to you. So again, right here is the kind of the end result of our PPP2 section. All right, so now we're going to get into the PPP loan forgiveness. On that web page, you've got a lot of links here. So if you're going to reapply for 1.0, like we discussed, they have now a reformed or new application for that. They have a memo for you related to the reapplying. That's a link to that. This is the SBA. We're going to go through an Excel spreadsheet related to the forgiveness calculation of 1.0. I'm going to refer to some SBA FAQs for the self-employed. Click on that. That's where you will go to get those. Then brand new came out some SBA called amended guidelines related to PPP1. Just came out, 100 hours ago. You have a link to that if you so want to look at. You have the PPP forgiveness forms. We are expecting that there's going to be new PPP forgiveness forms coming out. With that being said, with that being said, this is giving you a link to the PPP page on the SBA website. That's everything PPP. Very useful page. But you'll scroll and you're going to see a section for forgiveness. Now, right now, the applications that are there are the ones that we've always had. There was a new IRS ruling that came out, same thing, 100 hours ago. I've got a link there for you, just in essence, the IRS agreeing with the law, which we knew they should. So we know right now that we have PPP forgiveness applications, and as of the date right now, we have just the ones that we've been aware of, the 3508, the EZ, and the S. I'm recommending to everybody that they should wait to file for forgiveness, at least now, until we get the simplification forms. But that's that link that I was telling you about, where you'd be able to go, and when they put up the new forgiveness applications, what I'm trying to point out to you is that the link I gave you will automatically and should take you to wherever those updated forgiveness forms are. Now, for example purposes, we're going to focus in on Form 3508S, but don't be using 3508S until they make any updates. It may be that the update becomes 3508S, but the thing to note is that if it's not more than 150,000, it's no longer called an application. It is in essence a certification. You still have to retain all of the records, and you're just signing off to say, yep, I used it correctly, and you are indicating what your forgiveness amount is, which still needs to be calculated appropriately. So in the checklist that I provided to you, I've put it up here as well, indicating you need the application. You want to know your date of disbursement, only because you're disclosing this information. You have 2019 Schedule C as filed. You want to know your EIN if there is one. If you're not in business in 2019, you need to take a look at doing your quarter to quarter so that you can qualify. I went through that earlier. So now you can open up the Excel spreadsheet called PPP1 Forgiveness Calculations. You can open it up later. I'm going to pull it all up on the screen. There are 2 worksheets in it. In the Excel, we have Schedule C and Schedule F. So I've done the calculation if you're a Schedule C, and a Schedule F, mostly just the terminology. You know how to now unprotect it, no password. When you unlock it, it becomes yours. Check all the calculations in case you accidentally overrided a formula. This is example purposes only. Now, I had given you a link that's called SBA FAQs. And in those FAQs that came out in October, or were updated in October, I should say, this goes back to what I had told you at the very beginning when I was setting the stage, which is that LLC owners, for SBA purposes, also for IRS, doesn't indicate anything. You need to follow however it is that you file for IRS purposes. So for us here, most likely it's going to be Schedule C or Schedule F. In these FAQs, there is a section. It's on page 5 or maybe page 6, but I think it's on page 5. Either way, this is a section of what you get to include for your figuring of your forgiveness. Now, for most of us, we go, well, that's really nothing new. You've said it over and over. But I did want to also point out that it very clearly states here that health insurance and retirement do not get counted. And then the borrower only has to provide the Schedule C or Schedule F to the lender. But guess what? Under simplification, they don't have to provide anything for PPP 1. So we know that we're going to get an update to these FAQs, but that's the most recent one. Again, I'm just pulling up the Schedule C so that you don't have to try and remember back. I want you just to see it right now. So when we're doing our forgiveness, it's going to be based on 2019 Schedule C, line 31, which is that net income. And we then now, in your spreadsheet, fairly simple, straightforward, but for Schedule C, this is line 31 divided by 12 times 2.5. And then what was your PPP amount? So in this example, somebody didn't get enough. Maybe they applied based on 18 or based on an estimate. In these circumstances, technically, this individual, this self-employed, could go back to the bank and say, hey, I want to reapply because I didn't get what I could have for whatever reason. But for the purpose of forgiveness, in essence, the lower of those two numbers is the forgiveness amount, the PPP loan. Know this, and remember, if you are going to reapply for PPP 1, if it does get forgiven, you will not be able to reapply for it. Stating another way, if you're planning on reapplying, then do not put in for forgiveness. You need to wait. I talked about it earlier on the net. We know that you can now get the PPP based on the gross for Schedule F. We don't have anything concrete that that's how the calculation for the forgiveness will go, but it clearly will be. But nonetheless, we're dealing now with Schedule F. All that's different is that it's line 34, which is still that net income. You're taking that net income divided by 12 times 2.5. The loan's $15,000, so they're going to get full forgiveness. Now, when we're looking at this, I get it. I want you to remember that as of today, we don't have the new PPP forgiveness application. So the only reason I'm pulling this up is for example purposes, because if you'll notice, we went through and we figured out, well, what's the forgiveness amount? I'm just showing you that from the formulas that we did, the number that we came up with, this is where it would go on 3508S. We're going to probably, you're going to see something similar to this on the new, even though it's a certification. So I'm just trying to take it all the way from calculation to where you actually put it on the tax return. Okay, so there was the Family First Coronavirus Response Act. There were 2 different credits that came out of that the self-employed are able to take advantage of. The first is the sick leave. Many call it payroll tax credits, and it is true, but this is why I don't think it's getting much press, if you will, is that many think these are only related to employees, and it's not. It is for the self-employed. So in the section on the web page, there is a link to sick and family leave tax credit in Excel. The form 7202, so not 7200 for those of us that work with employers, but 7202 is the self-employment tax credit where it's claimed. I've given you the instructions, the link to that. Both of those are in draft form right now. And then the IRS has a great section talking about the self-employed tax credit. So that's a link to that. And then there is an IRS notice 2020-54 that talks about these credits, but this IRS notice mentions and describes the self-employed. So if for some reason you have to get down in minutia on this, I'm trying to give you a link to everything that would be able to help you solve whatever minor questions you may have. Now we're getting ready to go through 3 tax credits. 2 of them fall under the sick leave tax credit, and 1 of them falls under the family leave tax credit. What I do want you to know is that nowhere in here is the employee retention tax credit, because the self-employed, as well as the owners in businesses and the relatives to the owners in businesses, do not get to participate in the employee retention tax credit, meaning those owners and that related family. Now, I'm just going to mention to you, it is outside the scope of this seminar, but if you are self-employed and you are paying W-2 wages to employees, then you could qualify for the employee retention credit, but that's because it would be on your employee, not on you. Now, when we're talking about the sick leave credits, we've got 2 kinds. The first thing we're going to look at is for you, the self-employed, if you had COVID, if you suspected you had it, if you were told to quarantine, if you self-quarantined, if you sought out medical attention, if you sought out medical attention, if you will, related to COVID, then you're going to qualify for this credit. It's 100% of net daily earnings. We're going to see how you calculate that out, but it's not more than $511 a day and no more than 10 days. If you've opened up that Excel spreadsheet, you'll see that there are 3 tabs in that, and one of the tabs is related to this. Now I'm going to pull that up on the screen here in a second. But the great thing is on these 3 tax credit is that the self-employed is able to take advantage of it on the individual return. And it's a credit that is refundable, meaning if you don't have any tax and you do qualify for this credit, you will get the money back. Now, the second kind of sick leave tax credit that there is if you are caring for a household family member with COVID, under quarantine, told to quarantine, the person is seeking medical attention, they have symptoms of. The reason I want to give you those links that I did prior is that this is meant to really be a benefit. This is not meant to be, and the reason I say that is that this tax law was put into play to encourage people to stay home, to encourage you that if somebody has a family member or a household member and they have a suspicion of having COVID, that they would stay home. So this is more what I would say is make sure you're finding a way for it to apply. And then if it doesn't apply, it doesn't apply. Don't approach research with, I got to find a way that this doesn't work. No, approach research as, and your inquiry as, into the website of this should qualify. I'm going to go and double check. I'm going to see how this qualifies. If ultimately you can't find a way for it to qualify, well, then you know for real it doesn't. All I'm saying on this, and I'm not at all advocating that you can just do whatever you want. I'm just saying this is meant to help. The documentation for it is not then a determinant if we take advantage of it or not, but more what I'm telling you is that there's really not any documentation. It's on the honor system. So I'm not at all saying, so go ahead and take it. All I'm saying is that if you have a COVID test, if you had a family member that had it, that's not the only way. Now on this credit, it is a max $200 a day or whatever the average self-employment earnings are. And we're going to talk about what that is here in a minute, but you have to take it one step further. It gets a haircut, and only 67% of the lower of the average daily pay, or $200, will be taken into account. It's the same for 2021, except that it ends at the end of the quarter. Now, you have a link to the instructions for Form 7202. Why? Well, this is going to be a credit you don't want to miss, period. Especially, I mean, assuming you've had these circumstances. So the thing is, and for a lot of us, we, and I get it, but for a lot of us, or a lot of you, anything IRS and you see instructions and all this stuff, it's like, oh, it's just too confusing. I don't know that. That is wrong. What I want you to be prepared for is to not get frustrated with whoever's doing your tax returns because they don't know this as well as you're getting ready to know it. I don't want you to get frustrated with the ones that are doing the tax returns if they blow it and they didn't take this credit. What I like to tell people is that with your tax professional, your EA and your CPA, you have more responsibility to communicate with them than they have to communicate with you. The clients that I have fired in the past are the ones that are not interested in their taxes. Here's how you're interested. You ask questions, you verify. I love it when a client goes, hey, did we do that? Like, oh, well, let's take a look. Let's make sure. So what you're going to want to communicate to whoever's doing your taxes, or if you're doing it on your own, you're going to want to make sure that if you qualify for this, you're getting it. And I'm going to actually show you how the calculation is done so that you would be able to, in essence, verify the calculation, whether it's done by a software or it's done by a preparer. And I'm also going to show you where to look on the form, because here's the deal. You don't judge somebody that's doing your taxes on your refund. You don't judge them on, well, how is it that they gave me ideas? So when I've over the years had people come to me and they're like, well, I'm going to leave such and such. And I'm like, well, why? They're like, well, they never called me. I'm like, well, why do they need, your dentist doesn't call you? Did you leave your dentist because they didn't call you? Did you leave your barber because they didn't chase you down and say you need to get a haircut? What I want to know from the client is, well, why didn't you call them? Why are you upset with them? My point is this: communicate extra with your tax professional. This stuff is brand spanking new. Now, with this is still in draft form. I want you to notice one thing, okay? Now, some of you may be bilingual, but I want you to notice something. It's all written in English. It's all written in English. You could read this right now and then convince yourself you don't know what it means, but that's only because you went into it expecting you don't know what it means. So guess what? We're going to walk through this because potentially, depending on what you make, these three credits combined, you can't take them in the same time period, but because we've been dealing with the COVID all year, here is the max potential of these tax credits: $17,110 in your pocket. 3 used cars out of these credits potential. Okay. This is not an area where you say, well, my person's going to take care of it. Maybe, but you need to communicate to them. And why am I harping on this? Because this credit is going to get missed. It's going to get missed. So much money is going to be left on the table related to this. And then you're going to read about it later. And you want to try and make sure that you're qualifying for this. So this Form 7202, brand spanking new. That's why no one's seen it before. Okay, just came out. So now we're going to look at the last Excel spreadsheet. It's the juiciest one you got. This Excel spreadsheet is potentially worth $17,110. Now, don't get me wrong. I think it would be hard to actually qualify for all of that. I'm just saying that that's the potential. So open up that spreadsheet called Sick and Family Leave Credit in Excel. Now, I'm going to mention to you that your slide, if you're following along right here, might say inadvertently employee retention credit. I did have 2 quick changes that I made after the last seminar. You may have picked up the set of slides that were right before I made these 3 typo updates. My point is that you're looking for the Excel that's on that web page under the sick credits, and it's called Sick and Family Leave Credit in Excel. So it's the same darn thing. We're going to have 3 worksheets we're going to look at. I did a calculation for each one of them for you. So I separated them out so you can see exactly how to calculate these. It's protected. It's all the same thing, you know. No password, unlock it. Once you do, it's yours, informational purposes. Check your calculations. So the first one here is what we were talking about previously, which is this. This would be you or your spouse if they're self-employed. This would be you with the COVID or the symptoms or the quarantine, the self-quarantine, seeking medical attention to, I was around somebody, they had COVID, I'm going to stay home and play it safe. I'm not at all advocating that you just take advantage of this like it's the wild, wild west. What I'm telling you is if you legitimately look back and you're like, you know what, there was a time that I stayed home. There was a time I didn't go and do something. Now, it does require that you weren't able to work, but also what I'm telling you here is that this is meant to help you. This is meant to make you whole as a self-employed for work that you missed. Don't find a way that you don't qualify. Find a way that you do qualify, and hear me carefully on that. If you're looking for a way for you to qualify and you don't find a way, then you really don't qualify. Does that make sense? So if you go out and you say, I hope that I don't find that basketball that we lost yesterday. My son was out playing basketball. The basketball is nowhere to be found. Well, I'm going to go make sure that I can't find it. You're probably not. But if you go outside and you're like, I'm going to find this basketball. I'm going to look everywhere I can. I'm going to find this basketball. You're approaching it as, well, I'm going to try and find it. Now, if you can't find it, then guess what? You really couldn't find it. So I'm trying to give you my take after going on 28 years. This is how I approach my clients. It's how I approach tax research. This is how I approach making sure that we're able to take advantage of what we can properly. So here's how the credit works. We've got our Schedule C, okay? Now this is on 2020, so we've seen Schedule C related to 19. That's all PPP, 1 and 2. We're now just dealing with 2020, okay? So what's your Schedule C for 2020? You probably don't know yet, so you really won't be able to finalize this, but here's the beautiful part, okay? Here's the beautiful part of you having this Excel spreadsheet is that you're going to know what your net income is on Schedule C. How are you going to know? Well, when it's complete and before you sign it and green light somebody to go ahead and e-file it, you're going to find Schedule C. There's a line 31. You're going to see what your net income is. Boom, put it into this spreadsheet, okay? It's not going to populate down to the end because there's an either or, as you're going to see, but you're going to put in 38,000, meaning in this example. So with that, it's line 31, it's 38,000, and it's 260 days. So you take 38,000 divided by 260 days. JJ, why is it 260 days? Well, it's 52 weeks, 5 days a week. So that's now how you're coming up with the average net earnings from self-employment during the work week. This is directly from the IRS. Well, that calculation is then an average daily rate of $146. Now, if you have COVID and these symptoms or all the things I just described, your average daily rate simply can't be more than $511. Well, in this example, we're going to take the lesser of B or C, which we then know that, we know that the lesser of it is the average daily rate of 146. I'll pause for a second. Let's say that the average is not 146 and it's $600. Well, then your line D would be $511. So line D is the lesser of B or C because there's a max that you can take on this, and it's $511 a day. So it's a max 10 days that you get it. It's not a max 10 days every time you would have an episode related to COVID. It's a max 10 days for the year. So in this circumstance, that would lead to a $1,462 amount. You can tell behind the scenes there was some cents and it rounded up. So behind it, it did track everything down to the cents. It just rounded here. That's going to go on line 10 of 7202. Now, most of the time you might be like, okay, yeah, line 10, I mean, No, no, no. You're going to remember this. You're going to remember line 10, you're going to remember line 13, and you're going to remember line 30. Because when you then look at a return, you may not know anything that's on the return. You're going to know how to find Schedule C line 31, by golly. You'll be able to find that. Most clients, they look at it, and the first thing they look, it's like, well, is the address right? Did they spell my name right? Is my social right? The kid's name's right? Yeah, I don't know about the rest. It's all Greek to me. I trust my person, and you absolutely should. But you know what you're going to do? You are going to look at Form 7202 if you qualify for it, and you're going to look at line 10. And you're going to make sure, first of all, that there's a number on it. And you say, well, I don't know what the number should be. Yes, you do, because you have the formula right here. You don't need to understand what goes on box or line 1 to 9. What you should know is that if you have these circumstances, that your credit should be the $1,462. My point is, sometimes it's better, and this is what we do in our office. We go, okay, the credit should be this. This is brand new. Okay, this is brand new, but the credit should be $1,462. Okay, with including the cents there rounded. So now when we go to do it as a professional, I don't go, well, I don't know if it's right or not. I got $700 on line 10. No, I'm going to make sure that it's $1,462, especially when something's new. Now, there's the second way that you qualify for the sick leave credit. So we've done it where you're with COVID or your spouse is with COVID. This is if you or your spouse is caring for an individual with COVID, symptoms of it, the quarantine, etc. Now, the IRS, I don't at all think on purpose, but the law reads that you're caring for somebody that's a son or daughter under the age of 18. IRS indicates several places that you're caring for an individual. It also lists several ways that you're caring for a family or a household member. So here's the thing. Here's what definitely doesn't count. Well, my cousin up in Minneapolis had COVID and I was worried about him, and so I went up there to be with him. Not going to count, in my opinion. This is somebody that's under your normal care in the household. Does your mom live with you? They got COVID, you need to be home. I would think that qualifies. So household seems to be a part of the description here. Nonetheless, I don't think we want to get too hog wild on this one. I think it really does need to be somebody that that's under your normal care, or somebody that without your care would suffer more, if you will. So we're taking that same thing, the line 31, right? It's still 260 days. We still have the same average, right? So that's still the same. What's different here is what? This is a maximum of $200 a day. Okay. The other one was a maximum of 511 days. Now, what does that really mean? It's not a maximum of $200. It's a maximum of $200 per day. So we took the line 31, divided it by the 260 days to come up with this average self-employed daily rate. It just can't be more than 200. So we see that it's not. Okay. Now there's a haircut with this, and it's a 67%. So you take whatever it is that is the lesser of the $200 of your daily rate, right? I've got the C and the D there. Okay. So you're taking D times 67%, and then it's still a max 10 days. Okay. So in this example, I'm saying that the person was out 9 days, and therefore the credit's $881 right there. So with this, it's on line 13. Okay. Line 13. So we know line 10 had the 1462. This is going to go on line 13. Now, I don't know about you, but you can buy a lot of dinners. Okay. A lot of outfits, a lot of baseball gloves. We got $1,400 plus another 800. I mean, that's some real money just from a few days that somebody was out of commission, related to COVID, had COVID, threat of COVID. That's a lot of money, in my opinion. Now, just to take it one extra step for you, because I'm a big advocate of you knowing where to look. This is now a Schedule 3, okay? What I want you to know is that this is where refundable credits get reported. Don't take it as, well, why, JJ, are you trying to educate us? I have a preparer. I want to make sure you're educated on this one so that you know where to look. I don't know how long it would take you, but if I had a stack of papers this thick and I knew I was going to Schedule 3, Schedule 3 is going to be probably the 6th or 7th page in a tax return. So I'm going to go right, boom, I'm going to find Schedule 3. There it is. And if I had any tax credits, I should be seeing them show right on 12B. So even if you don't want to go through the exercise of going down a few more pages, of course, I'm being a little sarcastic, and trying to figure out, well, did they do the credit? What was line 10? What was line? You definitely should see a number here. Okay, you definitely should see a number there. Now we have the paid family leave credits. The reason I think they're not getting a lot of press, if you will, for the self-employed is everybody's calling them payroll tax credits. Well, they are payroll tax credits, but they also apply to the self-employed. Now, I want to really point out to you, because I did have a little blunder typo. So if you're looking at this screen right now on the family leave credits, and over on the right, if it says a max 50 days and then $2,000, you have a typo version. I absolutely apologize. But nonetheless, it is a maximum 10,000. So you have the new slides. They're up on the website. It was the only number that changed on this. I noticed it when I did it last time. It was just simply a typo, but I want you to know this is a maximum of $10,000, this credit. It's up to 50 days that qualifies for this. This is huge. So this is the same calculation that we saw just a minute ago when you're caring for somebody. So this is an employee or the self-employed that qualifies, unable to work because the need to care for a child whose school or place is closed, or the child care provider unavailable. This doesn't mean virtual school. Now, for some of us, my son's 18, so it doesn't make any difference. But for some, you may go, school might as well be closed because the virtual, everybody's here. Nonetheless, this doesn't count if you're having to work at home because of virtual school. But this new law keeps the same in play through the first quarter. But this is back to last year. So we're about to wrap up. Here's your juiciest tax credit though. You'll notice that it's all the same. It all looks the same, right? Line 31, 260 days. It's a max $200 a day. It's the lesser of. We have the haircut of 67%. Okay. But if somebody was out and qualified for this for 36 days, that's $3,525 that has fallen out of the sky, in my opinion. If you remember, there was $1,400 and something, $800 and something, and you got $3,500 and something. This is real money. That is then 50-day max, still $200, still have a haircut, and we have 36 days, no more than 50, and then that's that credit, and it's going to go on line 30 of that form 7202, that brand new form. So that's where that dollar amount would go. All right, we're going to wrap up here on the EIDL. Just know this, okay? This is a little bit outside of the scope of what was put in here. I did indicate that I'd give you an update. The thing to note is that there is no second EIDL, okay? The EIDL is the loan. They don't have any more money to loan. They have money to loan, but only to first borrowers. EIDL is not going to be forgiven. It's been a program that's been around a long time. So if they forgave your EIDL, they'd have to forgive everybody's EIDL since the program's been around, which really came into existence for those that were tornado victims, fire, or hurricane, or drought. So do not expect an EIDL to get forgiven. 3 things related to the grant, and here's what you need to know. There's no solid answers, and it's because the SBA has to come out and clarify. And I don't mean like, well, gee golly, no, we really don't know, but there really is going to be 3 things that are going to happen. The thing to note with all 3, there's nothing you can do to be proactive. The SBA is going to have to tell us, and the SBA will be the one that contacts you. The one thing I want you to know is You should not be going on the SBA website and applying for another EIDL hoping to get this EIDL grant. What you're going to do is muck up the system and you're going to throw yourself out of line. So know this. Before, when you would go and apply for an EIDL, probably all know this, you apply for an EIDL, you would check a box to be considered for the EIDL grant, also called the advance. We also know this since the beginning of the pandemic, the SBA, to help spread the money around, moved to, well, it's not a flat 10 grand that you get. It would be $1,000 per employee, up to 10,000. Well, for the self-employed, guess what that ended up being? $1,000. So I understand for many self-employed, it's like, wow, it'd be nice to get the other 9 grand. I agree. So there is the possibility that the money that's been put back into the EIDL grant makes it to where the SBA goes, okay, we have enough now that everybody gets their flat 10 grand. I don't think that's probable. Why? We're still in a pandemic. It could be because that was the old program, but nonetheless, I wouldn't count on it. What we do know, though, is if that is the case, the SBA will contact you. So you'll have to wait on the SBA. You can call them and ask them, but you certainly don't want to go and reapply, because the application process right now on the website for sba.gov is for the loan. It's not for the grant, it's for the loan. The second option is that could be considered here is that if you only got $1,000 and now they're ready to give you another 9,000, well, it might be that you would get the other 9,000 if you're in a targeted area that would qualify you for the grant. The third option is no one goes and gets any more of what they could have gotten, and they create a whole new grant system that has nothing to do with whether or not you're getting an EIDL. It would be, come apply for this grant if you're in this targeted area. So this is the same language. More what I'm telling you here is that you got to keep an eye on it. If you're interested in it, keep an eye on, is there a program to apply for? Be careful on YouTube. It seems like every other little thumbnail says something about a $10,000 grant, $10,000 grant. When there's something real about this, I'll let you know. Most of the time with programs like this, I might do an update after 2 weeks. So I did an update about, I don't know, a week and a half ago, just saying, hey, here's where we are on the EIDL grant. If there is really nothing new, nothing to report, pay attention to my community page, because all it is a quick post. It's not even a video. So more to come out on this. I think we'll know by the January 31st mark, because that's when they're having to come and take a look at it. I know that says January 31st, 2020, but I think they have 24 business days, I think, to come up with what they're doing here. How do you qualify? Well, economic loss defined, low income community. So anyways, there's just no news on this. We don't know. It's a long way of saying sit tight, don't go reapply. And then the great thing is we know that the EIDL advance has no effect on the PPP forgiveness. I talked about that earlier. So it doesn't reduce down your forgiveness, which is wonderful. If you already applied for forgiveness and you got your forgiveness amount reduced because of the EIDL grant, then you'll need to get with your bank. I'd probably give them a breather, right? They got all of a sudden PPP2 stuff going on. If you have a payment coming due, then let the bank know, hey, I don't think I have to make this payment, but don't put yourself in a credit position to not make a payment for $14 because you're like, wow, I shouldn't have to pay it. Point is that we're in a pandemic. We may be coming out of it. We may be going back into it. It doesn't matter. My point is that there's a lot of moving parts here. If you have a payment coming due and it's reasonable, let the bank know, make sure that they're doing everything they can. The bank's going to be motivated to get that corrected because they then get the money right away. There's no reason that a bank's going to want to argue with you on whether or not your EIDL grant that got subtracted from your forgiveness should have happened or not. They're going to want to do it. Now, what the SBA, I think, is going to do is probably automatically tell the bank, hey, here's a check they don't owe. Maybe, we'll see. just need a little bit of time. But if you have a payment coming up, which kind of surprises me, some are saying they have payments coming up. I don't know how that's really the case, because there was supposed to be a full year before any payments were due in any way, shape, or form. And then it got moved to no payments are due until 10 months after the covered period. But we did nonetheless have somebody that had a question. All right, you can now start submitting your questions. There is some bonus material that follows this that you can take a gander at. This was an hour seminar. I've gone 2 hours. As you can tell, though, I put way more information than what this was originally supposed to be. I kept the price the same because I'm here. I want to help. I want to be a part of your advisory group, if you will, especially with the self-employed that maybe don't have the same access. So I'm going to take a quick little break here, and Amanda's going to visit with you for a second.
All right, guys, thank you for coming to JJ's seminar. I hope that you got some really good information out of this. I have really happy to see that there have been a couple of people that you found JJ today and that you got registered in time for this seminar. As he said, go ahead and start putting your questions in the chat box now. We are going to start going through them. He's going to answer questions for 1 hour. At the end of the hour, if your question did not get answered, that is what this email address is for. Send us your question. So as you type out your question, go ahead and copy it, paste it somewhere in case we can't get to it, because at the end of the hour, then you can email those and just say that you were in the Saturday afternoon seminar and put your question in there, and then just be patient and give JJ enough time to get back with you. We will be answering the emails. I can't promise you as to when you will get your answer, but it will get answered. Also, try to keep your questions, don't give out so much information, because he cannot legally and technically advise you, but he can answer general questions. So you don't have to go into great detail, just make it short and sweet at the end, but make sure that you send them in at least 15 minutes after the hour is up. Don't go home tonight, or if you are at home, but don't be laying in bed thinking of a question at 10:30, 11 o'clock at night and email. We want to just keep this email address, because not everybody has access to it, just reserved for the people who have attended the seminars and who have questions right after the seminar, not days after or hours after. So try to keep your questions short and send them in to us at least 15 minutes after the hour, but we will try to do go as quickly as we can to get through everyone's questions here. The seminar this morning, we were able to get through everybody's questions, and we only had to get a couple of emails. So I'm hoping that that is the case today. And again, we truly, truly appreciate all of you guys. It's so awesome, and it's nice to see some new faces around here as well. Awesome. I'm seeing a lot of great questions coming in. Also want to let you guys know, with all these new changes, JJ has, and I'm sure that some of you saw the live last night. We were up until almost midnight answering questions on the live on YouTube. And then he and he had 45 minutes of sleep yesterday. And then I got him in bed around midnight, and then he got up at 4 a.m. to start working on today's seminars. So I cannot promise you that all of these emails will be answered today if we get any, but we're going to try to answer as many questions as we possibly can. But just know that JJ is giving you guys his absolute 115 bazillion% of himself, and that we will get back with you guys. I just can't promise as to when. Okay, JJ is coming back. I'm not nearly as entertaining as he is, you guys. So here he is.
All right. Thanks for letting me take a quick break. All right, Amanda, ready to rock.
Okay, our first one is from Chuck. And his question is, I'm an S Corp with employees paying myself with W-2. I understand based on the opening that this seminar is not for me because I am not self-employed. Which of JJ's seminars should I sign up for? Thanks.
Yeah, so the one that I did yesterday, it's called Employers PPP1, PPP2, and I'm going to put it up on where you signed up for this. You'll see an option. It'll probably be up within the next day or so. No, by tomorrow. So it's called Employers. So just take a gander for it. If you go to jjthecpa.com on the first page, you'll see all the seminars and everything. So thanks for being on with us. And then also I'll mention for you specifically, if you're interested in the PPP2, I am doing a live seminar on Monday for employers. I'm doing another one for those that are self-employed, but those of you that are here today, it'll be similar content. But thanks for being on.
All right. Our next question is from Jeffrey. Bank of America has a special forgiveness process. Anything special I should be ready for in their process?
Well, if it's 150,000 or less, I would probably just hold tight because it's going to be that new certification program that we talked about. When they talk about a special, that might be that they're making it easier. If you're above 150,000, then really nothing's changed in terms of you're still going to need to fill out the EZ or the 3508, but hopefully the banks are just going to sit tight as well. But either way, just hang tight, see what comes of all of this. But I don't think there should be anything in a negative because they can't require you to do anything more than what the SBA is going to require.
There. Our next one is from Des Blay. Initially, only community financial institutions will be able to offer PPP loans on Monday, January 11th, and second round PPP loans on Wednesday, January 13th. JJ, would you explain this? Can a small business owner have less than 10 employees apply on the 11th?
You know, I appreciate you explaining that. I don't know what those differences are. I know that They're setting money aside for the small employers. I think they're funneling to the small banks. I don't think it'll run out in the 2 days. Most likely what that is to maybe hit a targeted group. So 2 days difference than whatever your bank, get your application into them. So I'm sorry, I don't have any more information on that. I'm not familiar with all that terminology.
All right, Desplay also ask, is the non-filer still working for the $600 stimulus like it was on the $1,200 stimulus for those who are not filing tax returns on 19 and 20? Overall, never worked and lived their family and not dependent on their tax.
Yeah, everything's working the same as it was before. And if you have to do anything related to the non-filer, you would want to go in again. So if you go to the IRS website, they have that was one of the first things that they updated is related to the EIP. And so check that out. But my understanding is everything's running the same. What's just different is the dollar amount.
Okay, and lastly, they ask if you don't have a form 941, 944, or 943 on hand, where can we go on our tax return for LLC 1120S to find the four payroll expenses? Example, for the self-employed, can we go to Schedule C or F?
So on the 941 is for employees, 943 would be something different. Those are separate programs, not part of the not part of the 1120S. On those tax credits, I had covered it in the seminar if that's what you're inquiring of. And so it's outside the scope of this. You can either go and check out that seminar. But on the payroll tax credits, there's just too much to it to answer quickly. So I don't quite follow the question, but nonetheless, it's outside the scope of the self-employed. So we'll have to just move forward.
Okay, Jane says, will receiving a monthly pension affect gross receipts?
No. So this is only things related to your business. This isn't gross receipts for you. It would be gross receipts for your business. So retirement, interest, dividends don't count. Unemployment doesn't count. Wages wouldn't count. It would just be related to specifically your business, who you're getting money from as, one of your customers.
Alan asks, self-employed received max 28,333 loan, but this was estimated profit and Schedule C line 31 was 60,000. Is the amount not forgiven due immediately or can it be paid over 5 years?
So it can get paid over time with no problem there. 20,833 would be the max allowed forgiveness. If you got it on or before June 5th, you pay it over 2 years. If it's after that, it's over 5 years. It's 1% either way, not compounded. Many banks are indicating that if you got it June 5th or before, if you request, they may allow you to do the loan over the longer period, and you can pay it off early at any time. But the SBA did come out and indicate sometime in the summer that there's not going to be any punitive or activity or any kind of penalty on that. That was commonplace.
Michael asked, what is required for the forgiveness later?
So if you're talking about PPP2, the forgiveness will be the same as PPP1. And if it's under 150,000, which is the self-employed, what will be required is that you put down the correct amount, but you don't provide any documentation for PPP1. For PPP2, the documentation that you'll provide at forgiveness time will be proof that your gross receipts were down in any one quarter at least 25%, or for the entire year down 25%.
Okay, Angela asked, have you seen the Wells Fargo forgiveness application yet?
I haven't, and I haven't gotten into looking at banks because what they're supposed to do is just simply adopt a adopt the federal or the SBA application for forgiveness. So hopefully they're going to wait around as well until the SBA comes out, which I bet it'll be next week, because it's really supposed to move away from the application and just be a certification for 150,000 or below. If it's going to be over 150,000, then I think it'll be the EZ still up to 2 million, and then above 2 million would be the 3508. But hopefully the banks will get caught up. I don't know why they wouldn't, because it's definitely to their advantage. It's less time.
And just a little note here real quick, because I made a mistake. We are only answering one question per person because of the amount of questions, and that JJ only has an hour. So my apologies on that. Alan asked, if self-employed has COVID in January 2021, which tax year does he claim the 6th credit on, 2020 or 2021?
Yeah, great question. The way I understand it is it'll be in 2021 because it fell into that year. We do want to pay attention because the Form 7202 is in draft form. The instructions are in draft form. There's a minor possibility. I don't think it's probable, but there's a minor possibility for the self-employed only. It could be that it could be on the 2020 return simply to provide more immediate relief. But I think if that's possible, it'll be very clear in the instructions. So I wouldn't count on it, but I would definitely verify it. I would expect that they'll have the Form 7202, which is what we went through, and those instructions finalized pretty quick, with it probably within a couple of weeks. And what section you want to look at is that any instructions that the IRS puts out, they always put in the beginning, like what's new. And then they always have pretty much at the very beginning, who should file this. And then they have when should it be filed. So it'll probably be in that first page that they'll make clear. And they always do a good job of saying, here's how it's going to work for the next year. So once they update that, I bet they have that information in there to know.
Okay, Jeffrey says, Bank of America won't give me my SBA PPP loan number, only my term loan number. Is that enough for my PPP 2.0 application, or should I ask them to escalate and send me my promissory note, etc.?
Well, a couple of things on that. If you're doing your PPP2 through them, then just give them the application and tell them to put it on there. If you're going to a different bank, then put whatever number you have on there. The SBA will be able to match you up by your ID number, your social security number. More what I would say is don't let this hold you up from applying. And then you do want to get those documents either way. I wouldn't even look at it as an escalation. You just need to get a copy of those documents. They'd have to give them to you. So at the end of the day, get your application in, make sure you're applying for it, and then do get a copy of your documents either way.
FGW Productions. If I have multiple businesses, LLCs, can I apply for PPP under each one?
Yes, and you're in fact required to. Now, if it's all under, and I know this isn't your question, but if it's all under one social security number, then PPP is one application regardless of the businesses being different. But if they have different EINs, then they're required to apply separately unless they're affiliated groups. But I doubt that's coming into play here, because affiliated groups would be more like a chain restaurant or things like that. So do apply separately on those. Oh, I'm going to mention to you real quick though, for those of you that have multiple businesses, if you have intercompany receipts, those should not count when you're talking about your gross receipts. Maybe you're going to count them, but you'd want to probably think twice, because it's intercompany. It's not treated the same way, in my opinion, when you're figuring out gross receipts for your business. So if you have gross receipts in your business and it's coming from a business that you own 50% or more, quickly make a decision on whether or not those gross receipts should be included. I will tell you this right now, because I'm not seeing any different guidance. but I am not on my clients including intercompany receipts, because we do have, companies and they're different, but it's like, well, we're going to pay a management fee over here because it needs money. Well, in these purposes, I don't look at that as gross receipts. Now, I will tell you this, I don't have that many clients that are qualifying, so I don't want you to interpret this as I'm trying to find a way. I decided up front before I knew any client circumstances that my approach is going to be, because I don't see any guidance on it, my approach is going to be that if there's intercompany money, I'm not counting it as gross receipts, not in an effort to help the client, but in an effort of separating out, because the spirit of the deal, if you will, is that they're looking at what are the gross receipts of the business. Now, the one thing I'll tell you is that if I have a customer and they have other customers, and one of their customers is their own company, then I'm going to count that gross receipt. So you probably all know what I'm talking about. You have a management company and a rental company and this, and money changes hands. I just don't see that as gross receipts. Now, if you have a law practice and that same owner also owns a lawn care business, and that law practice pays the lawn care business the same as they would pay everybody else, then yes, that lawn care business would count that as gross receipts, even if they're related in terms of the ownership. So all I'm saying is be smart on this. Remember what I told you guys about looking for a basketball. You don't find ways to not find the basketball.
Roxanne, I have a few corporations with tax deductions reducing my net income on Schedule C, line 31. I have a negative number as a result of depreciation on line 31. How do I handle, oops, sorry, it jumped. How do I handle this? I did get prior PPP 1.0 and EIDL loans.
Yeah, so EIDL's based on the gross, PPP based on the net on Schedule C. Know this, on the depreciation, you may have taken Section 179 or bonus depreciation or an expense under the repair regs, if you will. You're not required to take accelerated depreciation. We're not required to take any deductions. Now, most of the time, the math isn't going to work to get more PPP by avoiding deductions. So I'm definitely not advocating to manipulate any numbers, but what I'm telling you is the IRS doesn't require that you take tax deductions. They're never going to sit there and go, well, hang on a second, last year you deducted this year you didn't. That's not how an audit's conducted. All I'm trying to say is that with depreciation, you do have some control over that. And the way you would know this is if the amount of depreciation on your Schedule C is the same as the cost of that asset, then what you know is that it got accelerated depreciation. And so you have the choice of, instead of expensing it all at once, you do the regular depreciation method, which might be over 5 or 7 years. So no one hear me that I'm trying to tell you how to manipulate, because here's the deal. When you're self-employed and you have a Schedule C, you're paying net income tax on you're paying income tax on your net income, and you're paying self-employment taxes. I've not come across a circumstance where it would actually make sense to not take a deduction to try and get more PPP. But all I am trying to say to you is that when you're looking at your Schedule C and you're making some decisions for yourself, just note that you can't get in trouble for not taking a tax deduction.
All right, Daryl Thomas, AKA God Dozer, wants to know, how come God didn't make me as smart as you, JJ? Thank you.
You're very kind. So God Dozer's been with us since the beginning, and here on my set, I call it a set, my home office set, we have right here, I think this is one of the first gifts that we got. So thanks for being on. Very kind. You're very kind, my friend.
This is from Ben. Me and my brother are both have an active partnership in LLC. We both drove a semi truck in the team, no employees. We got our PPP 1.0 loan based on both our K-1 forms. The amount was $42,000. Now, what application 35 08EZ 3508S we must use for the forgiveness, and what supporting documents along with the forgiveness app. We paid ourselves 2 months interest, payment of truck and truck parking fee, nothing else, thanks.
So with the partnership, if it's under 150,000, you'll still fall under this new simplification. It'll be a certification. The amount of forgiveness is based on what you got the loan on, which is Schedule K1, Box 14A. There is a provision, if you go into the link that I gave you, that is the SBA FAQs. You click on that, probably page 5, maybe 6, you'll see a section that talks about the partnership. And what it indicates is that you would take that box 14A, that's on the annual amount for 2019 K1, which sounds like it might be the exact same number as that you used, divided by 12 times 2.5 times a little quirkiness of 92.35%. So all you're going to need to do on that certification is that calculation. You are not going to have to provide any documentation because you're under the 150,000. Now, if you get PPP2, it'll be based on the same thing. Self-employment earnings on Schedule K1, Box 14. Side note, reduced by Box 12 of Section 179, just a technicality, but it is in that paragraph. Now, the one thing I want you to look at is, and I'm assuming you haven't done your tax return yet, so get with your tax professional, because with partnerships, distributions are a little more unusual than any other entity in terms of how they are accounted for. But if you read in that paragraph, my interpretation is that money that you got for PPP did need to also get paid out as a distribution. So whenever you go to, whenever you go to file the return for 2020, get with your tax advisor before you file for the forgiveness, just to make sure everything matches up. Because similar to the Schedule C filer, this is really based on the K1 for the partnership for the partners. And so anyways, just be sure of it. And what I would say right now is pause. There's no reason to apply for forgiveness. You have 10 months before payments are due. You have 10 months to apply. And I'm not saying wait the 10 months, but right now there's so much going on. Pause for a minute. I also think we're going to get more clarification, not clarification. I think that they're going to continue to make it easier for the partners to get full forgiveness. And the reason I say that is that the partnerships have been the last to get clarification, and the very, very last have been Schedule F. So point is, just hang out. You got plenty of time, and then get after your PPP2, which will be based on that same Schedule K1 14A.
Okay, this is, I'm going to answer this one. LaShawn, I did reply back to your email, and I sent you the link for the December 28th seminar that you attended. So check your email for that. Tasha, JJ just answered this for somebody else. I'll go ahead and ask your question, but he did just answer that the answer is yes. But she says, I have more than one business. Can you apply under another business or combined?
Yeah, so if it's the all Social Security number, it'd be combined. And yeah, so many questions are coming at once that we didn't want to let her know we answered it. But if it's under the Social Security number, it's all in one app. If it's separate ID numbers, you're required to do separate apps.
All right, this is from Valerie Clark.
Hey, Valerie.
On the Schedule C for self-employed, I chose the expenses for use of my home based on SF. Then can I still add expenses in Part 2?
Okay, so so we're talking square feet. So on the home office, I think I'm following. On the home office, it's, you have 3 methods. You pick one. You have the direct method, the indirect method, and then the simplified method. I'll tell you this right now, in 28 years, this simplified method yields the biggest deduction. But the indirect is, in essence, what's your square footage of your total, and then you take in all your expenses and you do the percentage. The direct is similar to that. But on the simplified, it's that or not the other two. I think that's what the question is. But the simplified, you're talking up to 300 square feet, $5. And I don't actually have any clients that we do the home office on, because they're all S corps. I only have a couple of Schedule Cs, so that's just not an opportunity to do it. But if I have any clients, I'd be like, you know what, let's just do the simplified method, because basically you're going to get a bigger deduction for it, in my opinion. And then you don't have any aspect where your house has been depreciated. So anyways, and then do keep in mind, it does reduce down line 31. And that's part of what I talked about earlier, is that when you're estimating what you're doing, which sounds like that's what you're doing right now, trying to estimate your net.
All right, this one is from John. Just to be clear, should we wait on additional guidance for PPP1 forgiveness, perhaps a new 3508 EZ, and that is expected to be forthcoming later in January?
Yes, definitely wait. I've not let one client file for forgiveness, waiting for this stimulus to come. And then I know that we are 100% going to have, it won't even be an application, it'll be a certification. So sit tight, it'll be big news. I'm sure you are. Pay attention to my channel, because I'll be indicating that. And then I also think the banks will finally catch up with that and definitely want their customers filing that certification, because you don't have to provide any documentation. You still have to do a correct calculation, but there's no documentation, which obviously saves the banks a tremendous amount of time, as well as the SBA.
Okay, this one I will answer. This is from Ryan. He asked if there are any openings for the January strategy seminar. Yes, there are. You can find that on the jjthecpa.com/seminar page, and it will take you to the calendar where you can sign up, but there are openings for that, so you guys can go ahead and go register for that.
Yeah, thank you.
This is from Michael. If I'm applying for 2 quarters and they are not consecutive, is that okay? Example, Q1 and 3.
Well, yeah, so if you're talking about the reduction in the 25%, you only have to meet that criteria in 1 quarter. So it'd be, to be sure, it'd be Q1 compared to Q1, Q3 compared to Q3, 22-19. But yes, it doesn't matter which quarter, you just have to have 1 quarter if you're talking about the 25% in reduction test.
NW Realty, I had applied and received PP1 mid last year. Can I reapply for PPP 2.0, or rather reapply PP1 as a single member LLC?
So if you qualify to do PPP1, here's my general advice, and that's a reapplication, meaning you got PPP, you haven't filed or gotten forgiveness. It's just now you could qualify more because of a calculation or an update in the rule. And then you would follow whatever opportunity there is to file for that. But what I'm recommending, because it'll go quick in the sense of the process, is apply for PPP2. That's where the energy and the wheels are being greased, if you will. The banks are going into PPP2 mode. Reapplying for PPP1 is going to be probably 1 out of 1,000 or 1 out of 500 applications. So secure your PPP2, because they're mutually exclusive. If you don't qualify for PPP2, then go ahead and go after PPP1 reapplication. But get your PPP2 secured in your bank, and then go apply for the PPP1 reapplication.
This is from AC. My bank is asking for proof of self-payment. Is there anything I can show them to prove it is not necessary?
Oh, these banks. Well, here's the thing. Just sit tight, because this new stimulus, you're not even to provide any documentation. The bank can't ask for it. It's a certification. It's no longer an application. So sit tight. I did do a number of videos. If for grins you want to see one, I've got a playlist called Self-Employed PPP Forgiveness. And there's one, and in the thumbnail, it says the self-employed cannot be an employee by law. So you just have bankers that still believe in unicorns, and they've read the stories and they've been told there's no unicorns. They just still believe that there must be unicorns. Of course, I'm having fun. But there is nothing you can provide. It's a calculation. And in that video, I don't just make my case. In that video, I provide in the body of the video a link to the IRS instructions and website and documentation indicating by law that the self-employed cannot have payroll. They're not considered an employee. They can't have payroll. And then in the SBA guidelines, which you have, those FAQs, it indicates right there in that paragraph that I had up in the slides that all you provide is Schedule C. Now, thank goodness we have this simplification, and there's just going to be a certification. So sit tight, you got plenty of time, and just wait until that certification comes out. And I'm telling you, it's going to be soon. Within a week, maybe.
Becky asked, Form 7200, all three options are available to employees and self-employees?
So 7200 is only for employees or the owners, but it's only for W-2. The 7202 or 7202 that we went over, that's where the self-employed takes it. 7202 goes with the individual return. The 7200 goes with, in essence, corporate or business payroll. So let me clarify though, if you're self-employed and you have employees, then you would use 7200 to claim credits on your employees, and you would use Form 7202 to claim credits on yourself as the self-employed.
This is from Michael at Your Auto Advocate. I use one business checking account where I commingle my deposits, show more than my gross receipts are. Do I make notes on the statement explaining what each deposit is for PP2 and the 25% down situation?
Yes, great question. And you're not alone on that. So I'm glad that you asked it, because what's key there is that you are wanting to segregate out. So almost the SBA would in essence require you to do that, the IRS the same. So yeah, go through your bank statements, make notes on it. If you're unsure, then, don't include it, if you will, unless it's something, huge. But yeah, I've been preaching that, lack of a better word, since July. Go through the bank statements. It's very common. I know most small businesses don't have a separate bank account from their business. So yeah, do that, make note, and then come up with your amounts, and hopefully you will qualify. But nonetheless, you're going to do that in a very great way there.
This is from Benjamin. For the tax credit for caring for a child, if my wife does our bookkeeping and had to stay home with our child, is there any way to use that credit for her if she is not on payroll?
No, it won't qualify if they're on payroll. And then your wife would have to be self-employed, having self-employed earnings to then qualify, because one of the qualifiers when you look at Form 7202, it has to be a business that's, in business and on February 15th and be a viable business. So I don't see any way there, unfortunately, that your spouse would qualify, because it's meant to be a replacement of income that could have been lost during that time period.
And she is not on payroll.
Yeah, so not on payroll, won't be able to, and if she's not self-employed, which doesn't sound like she is, then unfortunately there's not a credit available for that.
Okay, this is from Debbie. How would you apply for PPP2 if you were a Schedule C filer in 2019 and an S corporation in 2020 with a much smaller payroll?
Well, if it's the same ID number, I mean, that's a little bit of a predicament because you're doing 19 and 20. I think that you would have to, if it's the same ID number, then you're going to have to apply, in my opinion, based on how you are now. So if you're an S Corp now, then you're going to need to apply as an S Corp. I don't think there'd be a problem if it's the same entity that you would be comparing whatever the gross receipts are in 19 or 20, regardless of it being a sole proprietor and then an S Corp, because that's a separate test. But then in terms of what you would qualify for the PPP, would be then as an S Corp would apply for it, because you're applying for what your entity is now. So it would be based on the wages out of the S Corp. And I do think the IRS, or I should say the SBA, would be fine, but I think they would require that you would be comparing because it's the same business. That's all if it's the same ID number. None of that counts if when it was a sole proprietorship, it was under your social, and now it's got an ID number and it's an S Corp. These would be two mutually exclusive aspects there. But I think that answers it.
Okay, this is from Diane. At one point, it was understood that you could not take PUA and PPP1 and that the greater of the two would be the best to take. Is this still true? Thank you.
Yeah, and it's state by state. So it really does depend on if the state is inquiring of it, is kind of the determination. The federal government or the SBA or whoever is in charge of this, their position on it has been whatever the state thinks. So that's why really what it comes down to is if the state is going to, in essence, exclude it, then it comes into play. But really, as time moved on, my own analysis on it, and it seemed to be consistent, is that, the PPP is not income. And it is support. I'm not going to say that it's not support, but it's not income. And that's why I think there's the quandary. I only know 2 states that require you disclose it. And actually on both of them, they want you to disclose it, but it made no difference from at least the ones that were telling me about it in their amount. So you can always err on the side and should if you're inquired of it. But what I had done a number of videos on in May is in the absence of the inquiry, then all you're doing is answering the question. So when you go to apply and it says, did you get PPP? Then the answer is yes, then you put it down. Or if it indicates, did you get any other compensation? Well, PPP is not compensation. But if the question is, did you receive any other federal aid? Then you would answer the PPP. So what I really concluded in the end is, don't make your own determination, apply for it, disclose what's asked of, and then you let the chips fall where they may. I would say this, though, that there's no way that I would see that if you did get PPP, that it would affect your unemployment more than 8 weeks. But the fact of the matter is, go and apply, and then you would see, because really, you don't want to be in a situation where the unemployment runs out and you could have qualified for it. The state's going to make sure you're not qualifying for something if you don't qualify. So that's really the best answer for you. Also, if you go to your state website for the unemployment, you want to look carefully because some of the states have different areas of the website that talk about the different programs, and some of the programs may be different. So the unfortunate thing is all of the states are different on that one. So I would just apply for it.
Okay, this is from Will P. I do not have QuickBooks, so can I use my bank statement deposits for Q1 and Q2 to compare 2019 to 2020?
Oh yeah. Yeah, you're fine on doing any of that. If I'm understanding the question, it can be as crude, if you will, or basic. It could be on, some good old fashioned lined school paper, ruled paper. So no, it doesn't have to be anything fancy. More what it comes down to is what was it in reality? If you get it from your bank statements and you hand scratch it out, that's acceptable.
Okay, and just to let you guys know, Diane, yes, the Q&A is also being recorded. So whenever you get this video back, all this will be a part of it as well. So next one is from Steve. More than one Schedule C, one with net income and one with a loss. Can I use the one with net income only, or do I have to use the combined net of the Schedule 2 the combined net of the two Schedule Cs to apply for the loan?
No, if you have two Schedule Cs, you have two separate businesses, you would be able to apply just with the one. The way that you would be required to combine them is if you were getting PPP on both of them, you would then combine them. But if one's a loss and one's income, they're two separate businesses. That's how you've regularly reported it. And I already know of a circumstance where we inquired of the bank on it, and that was their conclusion as well, because it was separate businesses, separate Schedule Cs, and that's how it was consistently done in the past. So I would just apply for the one that has the net income without combining them.
This is from Evan. If my repayment starts at the beginning of February for PPP 1, but I'm not applying for forgiveness till we get the new form and the green light from you, do I start payments and then they refund those payments back, or what is my process?
Well, the process is to contact the bank, because there's no way those payments are due in February. It's about as straightforward as it can be in the SBA requirements. So I would email them and say, my concrete understanding is that there is an automatic extension of payments of 12 months at least. And then the SBA came out and said, hey, payments are not due until 10 months after the end of the covered period. Now, what banks are doing, which makes me angry, is if the borrower isn't reaching out, they seem to be doing what they're doing. And so what I would do is contact them, indicate that you don't believe the payments are being made. But if you have a bank and they're still chasing unicorns and they don't seem to get what you're talking about, and a payment comes due, then don't risk somehow there being a credit, hit. I would make it, and I'd make it angrily, but you would want to go ahead and make it, and then yes, you would get that money back. So I don't know why these banks are doing that, because that's a lot more hassle for them. But I think this automatic forgiveness is going to be out before then. So I think that's the good news. I think this automatic forgiveness will be probably out next week.
Hey, this is from Jim. I received PPP 1 disbursement on 5/4/20. Want to verify that the SBA formula was gross receipts or net. Did law change after my disbursement?
Hang on. Oh, I'm just going to say real quick, if somebody tried to, I don't know why it's this, I had a setting on that seminar tomorrow that you couldn't sign up within 30 hours. It was supposed to be within 30 minutes. So if anybody's tried to sign up for that strategy seminar and you didn't find an option, that's why. There's just a weird setting on that. So with that being said, do you mind reading that question again?
I received PPP 1 disbursement on 5/4/20. Want to verify that the SBA formula was gross receipts or net. Did the law change after my disbursement?
So if we're talking about Schedule C, it was based on the net. If you got it based on the gross, it was actually never based on the gross for Schedule C. There was a very short period of time at the very beginning of April where the SBA rules read that someone could go and get it based on their gross, based on the 1099s they received, but that was quickly corrected. So if you got the money in May, at that time, it would have been that the loan was based on the net of Schedule C.
Okay, this is from Coach's Pit Barbecue.
What's up, Coach?
How do I file my 7202 to get my credits?
Yeah, so that's going to go with, great question. That goes with your individual return. So you've got a great accountant there. So just communicate to them. Really what the basic thing that they'll need is you'll just need to let them know, here's the days that you either had COVID or here's the days that you were carrying, because they should be able to do the rest from having the Schedule C. They'll know what your net is. They'll be able to figure out your daily. They know what the max is. What they just really need from you is the number of days that you qualify for it. If they don't ask you any questions about it, hit them up a little bit and just say, hey, did I give you the information? And then really know this, if you have COVID, it's really structured to be that pretty much should be a 10-day credit for you, because it's supposed to be 14 days of quarantine, which would be 10 business days. If you're quarantining with, family with it or whatever, that also really should be a 10-day. So I'm not just saying arbitrarily to anybody listening. I'm not just saying, oh, take 10 days if you have it. I'm just saying it's meant to be, well, it should have been for 10 days. And then the one with the school being closed, then that is really just whatever days that applied to, up to 50.
Okay, this is from Chris Green, CPA.
Hey, what's up? CG, the CPA.
Please clarify, the Form 7202 will only be submitted with the filing of the tax return. Is that correct? As a CPA, we may not know that our sole proprietors are sick with COVID or sometime during the year, so it will be one of the questions for them at tax time. I see no way to file the 7202 other than the 1040 like you can for the 7200.
Yeah, and I read somewhere, Chris, great question. And for the benefit of us, I was making some of the encouragements of communicating, because we're definitely going to be having to be on our toes to make sure that our clients are indicating to us whether they qualify or not, or whatever days they're potentially were there. But the short answer is correct. There's no way to file the 7202 other than with the Form 1040, because it's intricate, and there's no way to get an advance credit, meaning the 7202 can't be filed like the Form 7200, which 7200 can be done separately. And then, of course, you would know if they have employees, the self-employed, then the 7200 comes into play. But for the self-employed, it would only be with the 1040. Great question, and hope you're doing well.
This is from Chris. I'm confused. I don't need documentation for PPP 1.0, but I do for PPP 2.0.
Correct. The documentation that will be required when you get PPP 2.0, if it's 150,000 or less, is no documentation other than the application. You will need to provide what we went through. Then at the time of forgiveness, 150,000 or below, the only documentation that you'll provide is proof of the loss of revenue.
Okay, and this is the 5-minute warning, so we'll just see what we can get done. This is from Amy. I'm confused. Can you recap the difference in between? Can you recap the difference in PPP 1 and 2?
The way I read it, you can. I'm kind of putting everybody on notice that you can, but I don't recommend trying to approach that, because the banks are already going to be in a fury trying to get all this done. And so
they're just asking if you can recap the difference.
Oh, they want me to recap
PPP 1 and 2
on the forgiveness.
She just says, I'm confused. Can you recap the difference in PPP 1 and 2?
Okay. So for the self-employed, the way you qualify for PPP-1 was based on 2019. The way that you qualify in terms of the dollar amount for PPP-2 is the higher of whatever your Schedule C is or Schedule F for 19 or 20. So it's still the line 31 of 19 divided by 12 times 2.5 is the dollar amount for PPP-1. For PPP-2, it's line 31 of 2019 divided by 12 times 2.5. You also do whatever you believe the net to be for 2020 divided by 12 times 2.5. Compare the two, you get the higher of. The difference between the forgiveness is with PPP-1, if you've not filed for forgiveness yet, there'll be a certification with no documentation. With PPP-2 for forgiveness, there'll be a certification with no documentation other than proof of the loss in revenue. All right, I think we did it. I think we went an extra hour.
Yep, we got as many as we could get answered. There are several more in here. As you know, I didn't ask all of your questions because it was only one question per participant in the seminar. So I didn't ask double questions. If you didn't get your question answered and you hadn't asked at least one, email us at jj@jjthecpahelp.com and then be patient while JJ and I come up with a way to get those questions answered for you.
Yeah, and I'll just throw in, definitely want to answer. Just know this, that to just be one per, be general, not gonna be able to get too specific, and really just, pick the one important question that you have. It will just be that I'm going to be answering questions related to the topic. And then just know this, and I say this as a positive, most likely, other than this strategy seminar that I'm doing tomorrow, I don't know that I'm going to do Q&As anymore because I have a real sense of duty that I want to answer your questions. So know that that's the intent here. The first seminar that we did Q&A, I did a seminar for 2.5 hours, and then I stayed on and answered questions for 4 hours. And then we've kind of come up with this different method. So just know this, the seminars on the go forward, I'm really not going to probably include the Q&A. And I'm only saying that from the standpoint of, I definitely want to make sure I'm doing what I had shared with you all. But with these seminars as being as big as they are, which I wasn't really anticipating, which I appreciate, I definitely want everybody to get their answers. So just be mindful that there's a lot of other people, and I'm going to try my best. And the hope is that we can get it done, by the end of the day tomorrow. But tomorrow I've got the strategy seminar. Monday, I don't know that it would make sense for any of you to come to Monday's seminars because it's just on PPP. It's covering what I already covered here on PPP 2.0, that is. And then as it relates to Tuesday, just throw that out there because we have some number of you on that also follow. But Tuesday, I might be doing a seminar, if I understood it correctly, following potentially in the footsteps of some pretty big individuals, Grant Cardone and Jordan Belfort. No matter what you think of them, they're pretty big time. But I might be speaking to like maybe 50,000 people at once. And then on Wednesday, I'm going to be speaking to a countless number, the state of Texas, SBA. In the state of Texas, it's a division of the SBA, but it's the SBA has asked me to do 2 seminars on Wednesday, which is just to say this: you guys have been a big part of this, and I appreciate it. It's leading to some other wonderful opportunities. Pay attention to the YouTube channel in the sense that I am going to be putting out videos. I think you've probably seen a difference from the videos that I'm putting on YouTube versus here, because YouTube is for everybody. And honestly, it's kind of easy to get your feelings hurt when people get mad at you. And it does kind of stifle sometimes you want to put videos out there. So this is why I enjoy the Zoom process. And I will be wanting to put out other seminars as things change. So thanks for being a part of it today. We will, within 24 hours, have a link up on the website. That's the goal, where you're able to go to it. Remember that the website, I will have it up for probably 48 to 72 hours. I'll probably take the website down and that page after then. But know this, if you go to that web page and you're like, oh, shoot, I didn't get my link to the video. Well, email us, but reply from an email showing that you did attend this, meaning from one of your confirmation emails, and we'll send you a link to it. And then in the body of the video will be a link to all of these materials, and then you'll have access to it for 30 days. Of course, I just would ask that you not share the link since you had to pay for it as well as everybody else. All right, well, hey, I'm going to close it out. Thanks so much for being here today. Let's see, we started at 2, so 3 hours. I think we're good. I think we were scheduled for 2. We did 3. I was glad to do it. Hopefully you got some great information. Appreciate all the support. Hope to see you at another seminar. And then I'll close by saying, don't you ever forget, you've never met a CPA quite like me. All right, y'all have a great rest of your weekend. Thanks so much.